Good evening, all. Being today's speaker is from the other part of India, other than Telugu states, and very efficient speaker. Fortunate to have the person with knowledgeable, sound knowledge in the areas where he is addressing the topic. And as you are aware, sir is from Jaipur. So if we speak in Telugu, it will be uncomfort for him to understand. So he doesn't like to make the guest to become to be in an uncomfortable situation. So they will be addressing the issues only in English, and some part maybe in Hindi can also be taken. So good evening, dear all friends. Welcome to the third academic study meeting of the association during the term 21-22-23. I request our president Garu to
Banjay. Since I am traveling, I request our Vice President Krishna Garu, please welcome the members. Please.
Thank you, sir. Thank you, President, sir.
Yes.
Good evening, sir. That is GST. Yes. And the latest
Just a minute. I'll mute all the participants so that there will not be any disturbance.
Yes, exactly.
Yeah, Krishna, you can continue.
Hello.
Maatladandi, Krishna.
Good evening, everyone, sir. Hello.
Maatladandi.
We are in today's meeting. GST assessments and the latest amendments on GST.
Krishna, Telugulo maatladle. Parle.
Kindly proceed, sir. Speaker, sir.
Yeah, vastundi.
Yes, sir.
Okay.
Yes, we can hear you, sir.
Krishna, maatladchu.
మాట్లాడాను కదా మళ్ళీ
మాట్లాడేసి అయిపోయిందా? Okay. Fine. No issues. Yes. And I present Mr. Dhadda with his brief profile. Mr. Dhadda is a fellow member of the Institute of Chartered Accountants of India. Associated with మళ్ళీ అన్మ్యూట్ చేసుకున్నారు వాళ్ళు. Sorry, sir. Sorry for the inconvenience.
No problem, sir.
Mr. Dhadda is fellow member of the Institute of Chartered Accountants of India. He is associated with Messrs. Dhadda and Co. as partner indirect taxes. He is having work experience of about 11 years in the fields of indirect taxes, with concentration only on GST, service tax, and excise matters. He is currently engaged in handling litigation along with advising clients, structuring transactions, conducting due diligence in given fields of taxation. He is special invited to the Indirect Tax Committee of ICAI for the term 21-22 and was also earlier part of committee for the term 2018-19 and 2019-20. He is also a panel of CIA Rajasthan as GST, service tax, excise advisor for industry members. Sorry. He has represented ICAI in Regional Advisory Committee Rajasthan under aegis of Chief Commissioner of Excise and Customs Jaipur. He is founding core member of study group of ICAI and GST research and upgradation matters. Yash has deep interest in academic discussions, upgradations, and training. He has written handbooks on principles of classification of goods for goods and service tax and GST, and also a cashable taxable person for IDTC of ICAI, that is Indirect Taxes Committee of ICAI. He has also actively contributed as core member of the team which has drafted technical guide on GST audits issued by ICAI. He has delivered lecture in lecturer in northern, western, and eastern parts of India, and are also regular attendee of various study courses on GST conducted by BCAS, CTC, ICAA, and other forums as a group leader and coordinator. He is an empaneled trainer on GST for NASIM, ICAA, and Regional Training Institute for Revenue and CA and AG officers and Rajasthan SGST officers. As his passion, he is also engaged in grooming young professionals of CA, CS, and MBA on the topics of soft skills and professional life management. Yasah is a commerce graduate from College of Commerce, Rajasthan University, Jaipur, and certification holder of indirect tax course conducted by ICAA. Thank you, sir. Before the session begins, panel goes into the hands of the today's speaker. I'll just make a brief about how the program goes on. The first technical session on GST assessments will be from 5 o'clock. I would mention it's delayed by 6 minutes. So we'll continue till 6:26 p.m. followed by 10 minutes question and answers. Post that we'll have a break of 10 minutes. Post that we'll go with the latest amendments in GST, and we'll also after completion of by the sir, we'll have a question and answer session. Sir, it would be convenient for you, or when as and when the question raised can be answered. How do we go?
It can be both ways. In case somebody wants to raise a question in middle also, there is no problem, sir. They can write in the chat box, or maybe they can just unmute and ask me. We can take it accordingly, sir.
Fine, sir. Fine, sir. Thank you. Sir, you have been made as a co-host. I'm also undergoing mute. Please continue.
Right. Thank you so much, sir. Good evening to all the members of TTPA, Mr. Nagesh Rangi and Mr. Srinivas Rao, the president, and Mr. Rao, obviously, because we have been interacting since last 1.5 weeks. So first of all, thank you so much to the members for giving me this wonderful opportunity to come between all of you and to share my views straight away from the northern part of India to the southern part. And no doubt COVID has restricted all of us in a lot of the things which we do, but at least I think as tax professionals, it has helped all of us a lot, because we have been able to share our views quite freely amongst each other. Like, I never thought probably that I would be sitting in my city in my office and talking to all of you on topic related to GST. I would be able to do my other work also in the first half, and you would also be able to sit at your office at your convenience and would be able to discuss the topic of your interest. So thank you so much for the opportunity. As Mr. Rao said that we have divided our session in two parts. First of all, we'll talk about the assessments under GST. That is something which has already started in last 1 year or so. And now that is going to be one of the most important aspects as a tax professional, which we have to take as a professional responsibility. So how different it is from your earlier VAT regime, in which all of you must have been practicing earlier, or service tax in case you have handled any service tax matters. And what are those things which we have to take care of? What are those things which department has to take care of? And accordingly, what are the bases on which the matters would go forward? And then after the break, we will take up the interesting issues which have come out from the recent GST Council meeting, some of the circulars, some of the rate changes, and some of the judgments which have been delivered in last 2 months or so, how it impacts us as a professional in our day-to-day practice, how can we give value add to our client. I would try and speak mostly in English. I am conversant with that. In case I require, probably I would take support on Hindi in middle also. Whenever I start, I always say that whatever you see on my screen, you see loading on my screen, that is not a problem of my presentation. My presentation is absolutely technologically upright. The problem is with the 3 letters which you see in front of you, that is GST. The problem in terms of that maybe the law was, or still the law is very good, but the implementation is still at the loading stage. We can't say that the implementation of the law has completed. In fact, today only in one of the articles in Economic Times, two leading authors have written that it is the time to bring reforms under GST rather than bringing repeated small changes in GST, which hurts the sentiment both of the industry and also the growth of the country, to which I think more or less all of us largely agree to. But if I look purely from a tax professional's point of view, I look purely from my commercial angle, or I look from the practice which as a tax professional, which all of us have been doing, probably I would not shy away from saying that whatever we were doing in VAT or service tax regime, all of us have become more busier, and all of us have been able to deliver more value to the client. And we have been able to do so because at some places we see a disconnect in the law, or maybe at some places we realize that the implementation of law has been not that smooth. And that is why when somebody is doing a business and realizes that there are bottlenecks, if we are well versed with the basic provisions, if we understand the technology to some extent, if we are conversant with the GST portal, we are better than the other professional who might only understand the law but may not know the portal also. So I think in today's time, it is very important to understand the GST portal along with the law. Before I go to the topic, one very interesting comment which was made by the then president of the CSTAT. In fact, he was inaugurating the Hyderabad bench of CSTAT only way back in 2016. At that point of time, he had read the constitutional amendment bill when GST was to be brought in India. And after reading the constitutional amendment bill while speaking at the inauguration of that Hyderabad CSTAT, he made some remarks. Probably at that point of time, the remarks which he would have made, people might not have understood the context properly. But when you try and read it today in today's context and you see things around you, realize that whatever he said, majority of those things were absolutely correct. And he said, when I saw the GST bill, it is a mind-boggling constitutional complexity. It is neither the exclusive list nor the concurrent list. It's a fourth-dimensional animal. It is post-Einstein physics. Innsbruck uncertainty of quantum mechanics is elementary compared to the complexity of this. Even the political complexity of the states and union coming together on the continental basis to resist the policy of GST is a huge challenge. It is an economical challenge. It is a political challenge, policy challenge, and administrative challenge. It is an adjudication challenge. So that is the next animal waiting to pounce on you. But we have to fight, we have to survive. And I think majority of those things, when you realize the adjudication challenge, you realize an administrative challenge, you realize state and union coming together, all of that to some extent we have faced in last 3 to 4 years or not. Now with this, when we come to our topic, that is the types of assessment, whenever we understand and talk about assessment, probably our client, he would be interested in knowing what are the provisions of input tax credit, what are the various exemptions, what are the various classifications. But you tell him that you should also know what are the types of assessment which is there, he would say, this is not my cup of tea. For that, you are already there to take care of the things. So for us, this becomes quite important. That is, what are those things which we are required to do for our client when a client receives a notice? What are those things which department can do against a client when they are issuing a notice? And what are our responsibilities and authorities? And what are those things which are in domain of the departmental officer? Now, if I go back a little bit to the earlier regime, we realize that in VAT, at least in majority of the states, if I talk about my state, we had this concept of assessment where we would file a return, then my return would be picked for an assessment. The officer on the basis of return would ask for numerous documents. I would submit the documents to him, and then he will pass an assessment order. So while passing the assessment order, he would seek information from me. I will give information to him, and then sitting at his own office, he will pass an assessment order determining whether I've paid any short tax or I've claimed any excess credit. Coming to GST, we realize that we use a terminology which is called adjudication. Obviously, it's not a new term. All of us have used this term in the earlier regimes also. Adjudication as a concept we understand is the process of determining a tax liability on a specific person or a taxable person, where assessment is one of the important underlying features where somebody has to determine the amount. So the process of determination is called adjudication, and the assessment is the quantum, the manner in which that process is undertaken. Now, you also know that there are two sections in GST which are quite important from the department's point of view. And whenever generally we talk about that what action department is going to take, we say that department is planning to issue a show cause notice against me for recovery of any tax or recovery of any wrong input tax or recovery of any refund. And they are going to issue a show cause notice under section 73 or 74. However, it is important to understand that department cannot issue a show cause notice under section 73 and 74 just like that by picking any mechanism which is given in the provisions of the law. There are specific ways in which a show cause notice can be issued, and before issuing a show cause notice, the departmental officer, to whom under GST we call a proper officer has to follow a certain specific path. And there are three parts which have been given under this law. One is there is a process, or there is a concept of assessment, which we are going to discuss today, that comes from between section 59 to section 64. Then there is another path, that is the path of audit, which is given under section 65 or 66. And then third is the path of inspection, where he might search my premise, he may issue me a summon, or he may require certain production of information from me under section 67 to 72. All of us know that inspection, search, surveys, all of this is taken care by the anti-evasion wing or DGGST or the state DRIs. Audit is taken care of by a separate audit commissionerate, and at least CGST always had a separate commissionerate. Now all state governments or state GST departments are in the process of setting up separate commissionerate for the purpose of audit. And lastly, the thing which is left with the regular proper officer, your division officer, your range officer, your circle officer, is assessment. And that is between section 59 to 64. Mind you, friends, it is very important to know from our perspective that whatever powers an officer has been given under, let's say, section 67 to 72, those powers may not be available with the officer while discharging his liability or duty as under assessment under section 59 to 64. Meaning thereby, if in case of a search, an officer can come to my premise and look at various loose documents, he may impound or he may take custody of various documents which is found in my office. That power is not available to the officer when he is doing an assessment proceeding upon me under section 59 to 64. Why am I saying this? What happens if an officer does this? The answer to that comes from a Supreme Court judgment in case of a municipal corporation judgment of 1965, where Supreme Court said, see, whenever any tax has to be collected, it has to be as per Article 265 of the Constitution of India. And Article 265 of the Constitution of India says, no tax can be collected without the proper authority of law. So proper authority of law does not only mean that law has to tell what is the rate of tax, what is the measure of tax, what is the value of tax, but law has to also tell me what is the process of collecting that tax. And if tomorrow departmental officer defaults in following a procedure, or he goes beyond the power or beyond the manner of conducting that procedure, then whatever procedure he is following is not as per the provisions of law, and he cannot recover tax from me. Meaning thereby, we look at the right hand side, what you see of your screen. We look at this show cause notice. Oh, a show cause has been issued against my client. I have to give a reply to it. But it is very important that before replying to that show cause notice, we take a step back, we look at it, that out of the three channels which are available with him, which channel has been followed by the officer, and while following that particular channel, the rules which have been laid down, the forms which have been given to the officer, the manner of issuing the notices to the assessee, whether they have been followed properly or not, If not, and before going to the merits of the case, before in fact telling whether I am liable to pay tax or not, I have to bring it on record by saying that the officer has not followed the procedure. And that is what my job is when I'm talking about the types of assessment which is there in GST. What are those things which needs to be taken care of? So what is assessment? Is it defined under the law? The answer to that is yes. Under section 2, subsection 11, we have a definition of word assessment, which says assessment means. So it's a means definition, means it's a very specific definition. It says determination of the tax liability under this act and includes self-assessment, reassessment, provisional assessment, summary assessment, and base judgment assessment. So basically, as I said, assessment is the manner of determination of the tax liability, and it includes everything. When somebody has to determine a tax liability, he would look at the charging provision, he would look at input tax provision, he would look at time of supply provision, and he would look at, in fact, that how I have done compliance of the law. And then it talks about certain terms. In fact, whatever terms you see after the inclusive part, all of the terms have been given a specific section between 59 to 64, except the word reassessment, which you find in the definition. All other words which are there in the definition of assessment, they have been given a separate section, and its scope has been specifically mentioned there. So we have this concept of self-assessment, provisional assessment, scrutiny of returns, scrutiny of non-filers, scrutiny of unregistered persons, and also the assessment which is called as a summary assessment. We will look at each of them one by one, and we will look at the nuances and specific things which as a professional we should be aware of to better serve our clients. Now, coming to the concept of self-assessment, all of us know that filing of return in common parlance is understood as self-assessment. But in fact, this section 59, it is only a 2-line section. In fact, not only 2 lines, 1.5 line section. But in this 1.5 lines, it incorporates a lot of those things which we should be aware of. Like, for example, 59 says, every registered person shall self-assess the taxes payable under this act and furnish a return for each tax period as specified under section 39. Now, this sentence in itself has 3 or 4 compartments, which is very important. First thing, under the law, every registered person is required to do a self-assessment. And because of this section, all of us are compulsorily required to file a return under section 39. That return to today we call the return which is on GSTR 3B. So whether GSTR 3B is a return under 39 or not, today is not the correct time to debate that. Let's say for today's discussion, we are assuming that it is a return under section 39. And why every registered person has to file a return under section 39? Because section 59 says so. Now, section 59 says that every registered person has to self-assess the taxes payable. Now, this is that first thing which is expected from the law. That means the first onus of determination of a tax liability of a registered person is not on the departmental officer, but it is upon us. And that is why you will see a lot of show cause notices when they're issued upon a specific person. Those show cause notices are issued under section 74. All of us know section 74 is a section where a tax liability is proposed to be fastened on a specific person on the allegation that the person did not pay the tax with an intention to evade the tax, and he had a malicious intention. Now, how do they bring or establish this malicious intention? They bring this by always writing in the show cause notice that you have not followed section 59 properly. Meaning thereby somebody who has defaulted in filing the returns. There the department will say you have not complied with section 59, where section 59 specifically wanted you to actually file the return and self-assess the tax liability. So by not filing the return, you have not done the self-assessment, or by wrongly filing the returns, you have wrongly done the self-assessment, or by not punching the figures properly in the returns, your self-assessment is incorrect. And when this is incorrect, when law specifically wants you to do something and you're not doing it, that means you had an intention to defraud the government. That is what their assumption is. Now, again, it is important to understand that the liability under section 74, that is to say that I paid the tax with a malicious intention, cannot be fastened upon me just because I have not filed my return under section 39 or I have not complied with section 59. The malicious intentions there has to be 2 parts to this. Something which I was required to do, I have not done. Second, whatever I have not done, it has to be demonstrated that it was intentional. So the department has to bring this on record that I intentionally did not file the return. And that is why it is always suggested to all the tax practitioners and their respective clients that whenever there is a situation arises where a client is not in a state to file a return, it is always suggested to write a letter to the department and tell them that there is going to be delay or there is a technical error, or just to raise a grievance on the GST portal by saying that you're not able to file the return. It will always save the assessee from not having the case against him where department is saying it is a maliciously you have not filed the return. Now, second thing, 59 says that you have to file the return specified under section 39. In law, there is a definition of reward return also given under section 2, subsection 97. It says return does not mean a return under 39, but it says any return prescribed is a return. But because section 59 says all returns, they are not relevant for 59. Only return under 39 is important. That means out of various returns we have GSTR 9, GSTR 4 or GSTR 3B. As of now, 59 wants me to file my GSTR 3B. In fact, we have a definition of valid return also, which is very interesting. There is a definition given under 2117 which says a valid return means a return furnished under section 39 subsection 1 on which self-assessed tax has been paid in full. Now you see friends, when you try to read section 59 with section 117, section 59 says you have to self-assess the tax payable in your return and file return under section 39. A valid return is a return where you not only determine the tax, but you also pay the tax. And that is why if you will recall, a lot of the times people say that in GST law, there is a possibility to file GSTR 3B where you declare your tax liability, but you don't pay the tax. Now, when somebody would say this to the people who have designed the GST portal, they would say, no, there is no such possibility. If you don't pay the tax, you can't file the return. However, that is not the correct reading of the law. Correct reading of the law is, I might file a return under section 39. I might declare my tax liability. It may not be a valid return till the time I don't pay the tax, but still it is a return filed which may be an invalid return. Okay. Now, my compliance of section 59 completes if I am disclosing it to the government that I wanted to pay a tax of 10 lakh rupees. I only have 8 lakh rupees available with me now. Please allow me to pay 2 lakh rupees of tax at a later point of time, but take my return. And that is a discussion which is there in the GST Council meeting minutes also. It is not the case that I am speaking something or somebody else could speak out of the reading of these two lines, but that is what in the GST Council meeting they have discussed, that the design of the law was always like this, where any assessee wanted to basically file a return by paying only partial taxes. GST portal should allow it because there is an enabling provision in the law. However, as of now, we realize GST portal works on a different tangent and it does not allow you to do so. In fact, we have section 49 subsection 8 also, which in fact tells you that how your self-assessed liability gets actually paid. And there it tells you that till the time you don't discharge your self-assessed tax liability of the previous period, you can't discharge the self-assessed tax liability of the current period. Meaning thereby you might pay the taxes the way you want to pay it in your cash ledger, but they will be adjusted only in the manner on the FIFO basis. If you want to pay any tax or you have deposited any amount in your cash ledger, then if you have a return pending and you have to pay tax against a specific notice, the tax which is there in the return would get paid first. Now, from the concept of assessment point of view, all of these things are very important to understand. How are you filing the returns? If you are little delayed in filing the returns, if you're not filing the returns on time, all of this causes a problem, and that problem arises from section 73 subsection 11. So we have this section 73 subsection 11 which says that if somebody who was required to basically pay the self-assessed tax, which he has not paid within the period of 30 days from the due date of payment, then 7311 says that 7311 is notwithstanding the other provisions or subsections of 73, but that person may be slapped with a penalty which can be up to 10% the tax due or 10,000 rupees, whichever is higher. Now, how do we pay taxes or self-assessed taxes? all of us know that we pay our self-assessed taxes while filing our GSTR 3B. So 73 subsection 11 is a section which is very dangerous section, which tells us that if you delay in filing of GSTR 3B beyond the due date by 30 days, then 7311 may get triggered, and you don't have to only pay the interest on the cash portion, obviously, but you might be required to pay the penalty on the whole amount of tax liability which has not been discharged, which can be 10% of the tax due. Now, if one would look at it in isolation, one would realize that means in all the cases where GSTR 3B is filed late, all of us have an exposure of penalty under 73 subsection 11. Now, the technical answer is yes, but we have a circular which comes to our rescue. That circular number is 76, dated 31st of December 2018, where that circular said that if you pay your taxes along with interest before receiving of any notice for delayed filing of GSTR 3B, then in that case, as per this circular, one may get a relief from provision of section 73 subsection 11. Because it is a beneficial circular, it is binding on the department, it is binding on the assessee. That's what the Supreme Court judgment says of the erstwhile regime. We have a judgment in the name of Ratan melting processes. And that is why one may resort to this circular. But it is very important to know that 76 circular says that if you want to take benefit of this circular, you have to pay the tax along with interest. So all those people who have delayed filed their returns GSTR 3B, they have paid the tax, not paid the interest. Don't wait for the notice from department to give you an interest and say we will pay the interest at a later point of time. Interest would not get increased. There is a risk which that person is carrying where they might receive a notice from the department by saying you have not followed 73 subsection 11. You are not covered by circular 76 because you have not paid the interest, and now you pay a penalty up to 10% of the amount of tax, and that would lead to unnecessary litigation. Next provision, which is in respect of self-assessment, because it's a type of assessment, is important, is if let's say there is any self-assessed tax liability which is due and which I have not paid, can that be recovered without issuance of a notice? And again, this question arises because we have section 75 subsection 12. Again, 75 subsection 12 is notwithstanding section 73 and 74. And this section says that somebody who is required to file the return under section 39, that is GSTR 3B, has not paid the tax properly or completely. Then in that case, that part tax which has not been paid, it can be recovered without issuing a notice. Department is not bound to issue a show cause notice to you. Now, one may look at it and one would say this is a theoretical provision because as of now, GST portal does not have that system that I can file my return, but I don't pay my taxes. However, there is a practical implication of this which comes from a judgment of Madhya Pradesh High Court, and this judgment is not in favor of the assessee, but rather this judgment is in favor of the department. What does this judgment says is that if somebody who has filed GSTR 1, which is not a return under section 39, it's a statement under section 37, but let's say I've filed my GSTR 1, I've declared my tax liability there. For some reason, I have not filed my corresponding GSTR 3B. Whether department is correct in recovering that amount under section 75 subsection 12, the matter went to the MP High Court. The MP High Court said that the department would be absolutely correct to recover the tax in this regard without issuing a notice under section 73 or 74. And it's a clear case of recovery which can be made under the provisions of recovery which are given under section 79(1) subclause C. So it is very important to know that one should not only consider filing GSTR 1 so that my recipient would be able to claim the input tax credit and somebody is lethargic in filing GSTR 3B. Both of them should always go in sync together. In fact, in last 6 months, the kind of amendments which have happened, if somebody has filed GSTR 1, not filed GSTR 3B for a continuous 2 months, his registration may 3 months, his registration may be suspended. Somebody who's filed GSTR 3B, not filed GSTR 1, in that case also department may come and visit your premises. In fact, in some cases where somebody has not filed GSTR 3B, they may block your electronic credit ledger also. So all of these things actually comes together, tells us that in all of these cases, a situation may arise that somebody who has not filed GSTR 3B, but only filed GSTR 1, the recovery of the tax can be made automatically without issuing a show cause notice. The second question in this situation comes is, okay, department can recover the tax amount. Can they recover the interest amount also without issuing a show cause notice? There the provision is in our favor. The reading of the provision has also been made by the Karnataka High Court in case of LC Infra Projects Private Limited in 2019, where Karnataka High Court said that till the time interest is not a self-assessed interest, meaning thereby the amount of interest has not been declared in any of the returns and it is unpaid, till that time you cannot call it as a self-assessed interest. Once it is not a self-assessed interest, it is not covered by section 75 subsection 12, and the recovery of interest cannot be made without issuing a show cause notice. So what we understand from this is, if somebody has delayed his self-assessment by not filing GSTR 3B for the specified number of from the due date, then in that case, the amount of tax can be recovered, which is there in GSTR 1, but the interest cannot be recovered without issuing a notice. For that, department has to issue a show cause notice under section 73 or section 74. This basically is the summary of various interesting things which are there in self-assessment. Only a 1.5 line section, but it incorporates a lot of the other things. Okay. Somebody has said I should teach a little slower. Okay. So I will be a little slow. If you realize that I'm speaking a little faster, you can tell me again. I will try and be a little slower in my approach. Okay. Then comes the next provision, that is the provision for provisional assessment. Now this provision, which is there in section 60, majority of us have not used this. All of us know and talk about advanced rulings. Advanced rulings as a tool, as a tax professional, all of us use. We approach the advanced ruling authority wherever we have a question regarding whether my product is taxable, whether I can claim input tax credit, what should be the valuation, what should be the classification, and for all these things we go to the advanced ruling authorities. Because the manner in which the advanced ruling authorities give their orders or judgments, at majority of the times in a very loose language, some of us call it as an adverse ruling authorities, that if you want an adverse ruling, go and approach the advanced ruling authority. That's what generally we say, because that's the impression that these authorities have created across India by giving the divergent rulings. There is an alternate to this. Where department has given you one more facility, that in case you are not sure about two things. What are those two things? If somebody is not sure about the value of goods and services, or somebody is not sure about the rate of tax which is applicable, either of the two. So remember friends, when you go in advanced ruling, there are 6 other things for which you can seek an advanced ruling. You can seek advanced ruling whether I have to take registration or not. You can seek advanced ruling whether I can claim input tax credit or not. All those questions are not relevant, or you cannot ask in a provisional assessment. What one can do in a provisional assessment, where I'm a taxable person. Now again remember, section 59, when we read, it talks about a registered person. Section 59 is applicable on a registered person. Section 60 is applicable on a taxable person. We know difference between a taxable person and a registered person is, a taxable person is a person who is registered or liable to be registered, whereas a registered person is somebody who has already taken the registration. So provisional assessment is applicable on a person who intends to take a registration. He's also required by the law to take a registration. But before taking the registration and determining his tax liability, he is not sure about either of the two or both. Whether what is going to be the value of his goods or services, and what is going to be the applicable rate of tax. Now, because he has confusion, there is section 60 available to him, where he may choose not to go an advanced ruling authority, but he may go to his concerned jurisdictional proper officer or the assistant commissioner, basically in that case, and raise an application before him in form ASMT 01, which is going to be an electronic application, and request for payment of tax on provisional basis. Where the person who wants to take this provisional assessment, he would say that I am paying tax on provisional basis. According to me, my product is classified under this HSN with this rate, or my product should have this value. and I want to pay tax according to this. Now I leave it up to you. How do you decide that? And in that case, when he submits all of these, the officer is duty bound to give an order of provisionally assessing his tax liability within 90 days from the receipt of the application. The officer is duty bound within 90 days to give a provisional assessment order, where officer, on the basis of what assessee has represented, would confirm till the time officer gives a final assessment order. Till that time, assessee can pay tax at this rate or on this value. But while doing so, the officer will also say that tomorrow my final assessment order may tell you that you have to pay tax at a higher rate. Then in that case, how am I going to safeguard the interest of the department or government? And that is why they may tell him to actually execute a surety bond along with a bank guarantee. And that the guarantee is not going to be more than 25% of the amount covered in that case. So basically, they take some guarantee. They have to give a provisional assessment order within 90 days. And on the basis of this provisional assessment order, an assessee can continue to do the business at the rate or value which is written in the provisional assessment order. Now comes the second part to this. The second part to this is, once the provisional assessment order has been passed within the period of 3 months from the date of application given by the taxable person, the officer is duty bound to finally assess the tax liability or the value on which tax needs to be paid within the 6 months from giving that provisional assessment order. He can again ask for additional information from the assessee by saying, okay, you give me additional information which I want to know. And then he can give a final assessment order. The timeline which is given is 6 months from the date of passing the provisional assessment order. In case officer requires additional time due to whatever reason, maybe the product is too complicated, or maybe he needs more time to understand it, then he may approach to his senior officers. He may seek additional time. Joint commissioner or additional commissioner can give him time of additional 6 months. And in fact, commissioner can give him additional time of 4 years. So 4 years is quite a long period of time, but that's the maximum time which can be given. They may seek an additional time, and then on the basis of it, they have to give the final order. If in the final order, rate of tax determined or the value determined is higher than the amount which is written in the provisional order, assessee is required to pay tax along with interest. In case the rate decided or the value decided is lower, then in that case, assessee is entitled for the refund, subject to assessee proofs that he has not passed on the duty burden to somebody else. So it's a good technique. It is procedural, but the biggest advantage of provisional assessment is, in case of an advance ruling, what happens is you go to an advance ruling authority. That advance ruling authority gives a judgment. If you don't agree to it, you go to an appeal at advance ruling authority, and after that there is no appeal available. However, in case of a provisional assessment, if somebody is not satisfied with the final assessment order, the person can go up to first appeal. If he is not satisfied, he can go to second appeal. If he is not satisfied, he can go up to high court. So that's the benefit of provisional assessment, where somebody has more options available with him to explain his case to the senior officer depending upon the complexity of the matter. Provisional assessment was used a lot. It is still used a lot in the customs, but in case of GST, some of us only use it, but it is a very good tool in all those cases where somebody is not sure what needs to be done and is looking for an alternate avenue to the advanced ruling cases. Then we come to third type of assessment, which is called as the scrutiny assessment. And this is that thing which would keep all of us tax professionals busy. In fact, it has kept all of us busy in last 2 or 3 years or so, where all of us would have received notices in form ASMT 10. I'm sure in any of your clients, you would have seen a notice in form ASMT 10, where the notice would tell you that we have verified, or we have basically gone through the return which you have furnished, and this is the discrepancy according to us, and you have to give a reply to it. Now, before we go into details of the scrutiny assessment, which is given under section 61, it is important to understand that whatever understanding of scrutiny assessment all of us are carrying, either from the income tax regime or from the VAT regime or from any other regimes, we have to wipe that off. Now that understanding, that procedure, that process is not applicable under GST at all. It has no relevance here. It has no value here, because the scrutiny assessment provisions which are given under section 61, they are completely different. They are completely exception based. And here department cannot seek information from me and then tell me that I have done something wrong. The process under scrutiny assessment under section 61 starts only when department has done its homework. They have been able to scrutinize my return. They have been able to find out a discrepancy. And now they are intimating the discrepancy to me after doing their homework and telling me this is the discrepancy which they have found in my returns. And for that, they are seeking a clarification from me or telling me to pay the tax. So tomorrow, if any officer calls you and says that your case has been picked up for scrutiny assessment, and now I'm sending you a long questionnaire to answer to this, our response to should be, sir, please tell me under which section you are going to send me a questionnaire. You can send me a questionnaire only at the time of audit under section 65. Or you want to ask certain information from me, you can issue a summon to me under section 70. But under section 61, in the name of scrutiny assessment, you can't ask information from me. I am not duty bound to come to you, submit the information to you, and then you tell me that you are scrutinizing my return. That is not the scheme. That is not the manner. That is not the case which has been written under section 61. So what is written under section 61? First of all, 61 is only applicable on registered person, which is correct also. 61 cannot be made applicable on unregistered person because 61 is scrutiny of a return. And for filing a return, one has to be registered. So section 61 proceeding cannot be done on a taxable person who is not registered. It can only be done on a registered person. Number one. Number two, proper officer may scrutinize the return and related particulars. So you have to underline this word for your understanding. He may scrutinize two things: return and related particulars. And remember, friends, we have a definition of return which we just saw in the previous slides, where they say return as prescribed under the provisions of the law. It can be any return. So it may not be only scrutiny of GSTR 3B, but it has to be scrutiny of a return and related particulars. And there the question comes whether GSTR 1 is a return. And answer to that is no. GSTR 1 is not a return. GSTR 1 is a statement. And thus, a scrutiny notice cannot come only for GSTR 1. However, a scrutiny notice can come for GSTR 3B versus GSTR 1 because it is a return along with related particulars. But a scrutiny notice cannot come for GSTR 1 and e-way bill because neither e-way bill is a return nor GSTR 1 is a return. A scrutiny notice cannot come for GSTR 2A and my inward supplies which are there in my books of account. That is also not possible. They can't do that. But a scrutiny notice can come for my GSTR 3B and GSTR 2A because GSTR 3B is a return and GSTR 2A are related particulars. Why would a notice come to me? A notice would come to verify the correctness of my return. So the next point is, what is the meaning of correctness? So correctness, Supreme Court has interpreted in lot of the judgment by saying correctness means something which is true, which is not untrue, and which is proper as per the provisions of the law. So first, the figures have to be correct. They should not be fabricated or incorrect figures in the return. And second, whatever I am punching in my returns, which they are scrutinizing, it should be in accordance with the provisions of the law. It cannot go beyond the scheme of the law. These two things have to be the center point in the mind of the officer when he's scrutinizing my return. And if on the basis of this, he is able to find out a discrepancy, then he will issue a notice to me in ASMT 10. So you realize that the ASMT 10, which all of us receive, where somebody would issue a notice by saying your 2A 3B not matching and all those things, for that officer has to do a homework. He can't randomly get up and issue a notice to you. In case he is doing that, you are duty bound to reply to him by saying that the notice is not proper as per section 61, and because of this, you are not in a position to reply to it. Because a lot of the times what we generally do is we say, okay, a notice has come. Why should we hurt the ego of the officer? Let's give the information. The answer to that is, under GST law, everything in the provisions have been made quite clear. In fact, when you would go to the next slide, we realize what can be the next step of the officer when he issues the notice. And if we bypass that, if we actually, on the basis of the face value of the officer, if we submit the information, then we are not actually following the procedure of the law, but we are following what officer is saying. And all of us know, as students of law, that officer cannot be beyond the law. Law obviously can go beyond the officer if that may be the case, but officer cannot go beyond the law. So, two things which we have understood: it is applicable only on a registered person. Officer has to do a homework and he has to bring out the discrepancy clearly in the notice in ASMT 10. We are required to reply in ASMT 11. Now, this also I would like to bring to the notice of the members that in the rules, they have been specifically manner in which we have to reply to an ASMT 10 notice. It is always advisable that we follow the manner. Though, even if we don't follow it, that does not mean that our reply will not be taken on record. But as I said in the earlier, if law requires a specific person to do something in a specific manner, that is applicable on the both sides. It is applicable on the department. It is applicable on the assessee also. Now, once we give a reply, if officer is satisfied with our reply, he will issue an ASMT 12. At least in my experience, in last 4.5 years, I have not seen any ASMT 12 in my office or in any of my clients' case where officer has been satisfied with my particular reply. That means 99% times officer would say, no, he does not agree to my reply. That being the case, what can officer do? That should be the next question. And we realize that under section 61, scrutiny assessment, that officer who has issued the notice, he does not have a lot of options available with him. And that is why he can't just tell me that he is issuing a scrutiny notice. If I don't agree to what he is saying, or if I don't follow what he is saying, then he can go and attach my bank account. He can't do that. He can't threaten me by saying that he will recover the amount of tax from me. He can't do that. At max, he can follow either of the 4 things which you can see on your screen. He can either refer my case to the audit. In that case, my matter will not remain with him. My matter will go to the audit commissionerate. He may refer my matter to the special audit, where a chartered accountant would basically be appointed by department to do the special audit. That also would not remain with him. He will go. The matter will go to somebody else. Third, he may refer a matter for the purpose of inspection and search. In that case also, inspection and search will not be carried out by him. It will either be referred to DGGST or it may be referred to anti-evasion in most of the cases. Again, the matter will not remain with him. So you see 65, 66, 67, in case he intends to follow any of these 3, matter will not remain with him. And we understand from our practical experience that departmental officer would not want that the matter which he has started goes to somebody else. He would like to bring it to the conclusion. So only option which is available with him is he can issue a show cause notice under section 73 or 74 as the case may be. Now friends, for issuing a show cause notice also, there are monetary limits. It is not the case that a superintendent can issue a show cause notice involving a tax amount of 1 crore rupees. He can't do that. In fact, any amount of tax which is beyond 20 lakh rupees, CS, IR and all those things, a superintendent level officer cannot do that. He has to give it to his senior. And in fact, a senior cannot issue a notice beyond the amount of 1 crore. It has to be given to the other person or the next senior to him, that is the JC in that case. So you realize that the person who is issuing ASMT 10, he does not have a lot of options available in his hand to take the matter to the conclusion. And that is why we need not actually honor the unnecessary requiring of information in the name of scrutiny notice. by replying to repeated question which somebody is asking in a scrutiny notice, because he is not entitled under provision of section 61 to ask for it. The next point in section 61 is whether officer can tell me or duty bound me that I have to reply to the notice within 5 days or 7 days. Again, the answer to that comes from section 61 and also by reading of rule 99. And when you read section 61, it is absolutely clear that whenever a notice under section 61 for ASMT 10 is given, for that the assessee needs to be given a time of 30 days. So the time of 30 days is given in the law, that is coming from the statute. If the officer is pressurizing any person by saying you have to give a reply within 7 days, we can very well make him read the law, the provisions of section 61, and tell him that I have the time of 30 days available with me, and I would follow that and I would reply to that in that specific point of time. Okay, so that's what basically he can do. The next question which comes in this is, what are the types of returns basically which he can scrutinize? As I already said, GSTR 1 is not a return, GSTR 9C is not a return, but GSTR 3B is a return, GSTR 9 is a return. Meaning thereby, if a notice needs to be issued, there has to be combination of either GSTR 3B or GSTR 9 with something else. If my ASMT 10 does not have figures from either 3B or GSTR 9, I can very well say that it is not a notice which is based on scrutiny of my return or discrepancy in my return. And because it is not a discrepancy of my return, you can't issue a notice to me under section 61. Next point is that notice has to be issued for a tax period. And in fact, we have a definition of tax period also, which is coming from section 2106, where tax period is a period for which return is required to be filed. Meaning thereby, I cannot get a notice where somebody is telling me that we want a data comparison for GSTR 3B for financial year 2020-21. He has to specify the tax period, that from tax period from April to March 21, these are the various figures of the tax periods of April, May, June, July, and so on. And this is a discrepancy which we are finding. If you receive a notice of GSTR 3B for a specific financial year, where it is not a tax period for filing GSTR 3B, one can again go back to the officer and tell him that the notice is not for the tax period, which is applicable for GSTR 3B, and you are not in a position to answer to that particular officer. So with this, basically you realize that under section 61 for scrutiny of return, the officer has very limited powers and he cannot go beyond that. In case he goes beyond that, he is not following provision of section 61. And once he is not following, we are entitled to reply to him by saying that we are abstained from the law from giving certain informational replies to the officer. In fact, we realize that under section 61, there is no provision where officer has given me a notice, I have replied to him, he again gives me a notice on same issue. He can't do that. He can't ask for a clarification from me again if I have already replied. So if he have issued a notice to me, I have replied to him, then he has two options. Either to accept what I am saying, or if he does not accept or he does not agree to whatever I am saying, then either to give my case to audit or special audit or investigation or issue a show cause notice. Or the third category where I will agree to what he is saying and I am going to pay the tax along with interest and penalty, whatever may be the case. So this is the kind of things which are applicable for the scrutiny of a return under section 61. I've already explained what officer can do and what we are entitled to do. The point of explaining this is that now those days are gone where somebody would give me a detailed questionnaire. I would give information on the basis of questionnaire and then my scrutiny will be done. Now officer has everything on his system for the purpose of scrutiny of my return. He has to pick things from my return only and then he can go forward in that particular regard. Interestingly, one thing which I received as a notice, just to share the example. So I received a notice from one of the officers where the question was that my client is a manufacturer. He's into manufacturing of goods. And my client is, because into manufacturing, that means to the customer, they're sending goods from their factory premises to the premises of the customer. The notice which was issued in ASMT 10 was that in my GSTR 3B, there was no expense of RCM, or I did not pay any tax under RCM. And the notice said that if my client is a manufacturer, obviously he would be engaging GTAs, goods transport agencies, on which tax needs to be paid under reverse charge. But my GSTR 3B says that the tax payable under RCM is 0. Now, whether it is a discrepancy, and we replied to the officer by saying, where is the discrepancy in my return? It is your assumption which you are saying that I should have an expense under reverse charge under GTA. I don't have that expense. If you are saying that I have received services of the GTA, bring that, tell me it is a discrepancy, then I will be able to reply. Otherwise, I'm not in a position to reply to that particular officer. So this we have to understand. As I said earlier, this we have to understand. We have to agree to this, that now the regime has changed and we are not entitled to give the information which is not mentioned in the law. Now we realize from 59 to 60 to 61, we come to section 62. This section of assessment is applicable on non-filers. Up till now, it was applicable on registered person or somebody who wants to start or wants to do something and wants a clarity, or somebody has already filed the return and on the basis of it, some information is taken by the department. Now we come to the next part where somebody who is registered under GST but not filing the returns to the government regularly, and now department wants to make the assessment of it. And we realize that we have section 62. Before going to section 62, just recall, in your client's case, lot of the times client would have received a notice in GSTR 3A, where GSTR 3A would have been a notice where they would have said your client has not filed the returns. And if he is not filing the return within 15 days of receipt of the notice, then his registration would be cancelled. That's what the notice would say in GSTR 3A. Now, friends, that notice is issued under section 46. And what does section 46 says? Section 46 says notice to return defaulters. So somebody who is required to file a monthly return in GSTR 3B, or somebody who is required to file an annual return in GSTR 9, or somebody who is required to file a final return in GSTR 10. Pardon, sir? Okay. Yeah. Somebody is required to file a final return in GSTR 10. If any of these three things are not done, then in that case, law gives power to the proper officer to issue a notice under section 46 in form GSTR 3A, telling the person to file the return. Up till now, it is absolutely okay. Now, what if that person does not file the return within 15 days? There, the section 62 gets triggered. And section 62 says that if you have been served with a notice for filing of return, you have not filed it, then the officer has the power to do a best judgment assessment. And from here on, the concept of estimation comes in the assessment, where now officer says that that person is registered in GST. He was given an opportunity to file the return. We gave a notice to him. He did not adhere to the notice. And now we are entitled under section 62 to take his assessment of the tax liability for the tax period for which he has not filed the return. And how are we going to do that? So section 62 says that wherever any best judgment assessment needs to be done on non-filers, in that case, the officer would gather the information which is available with him. And then on the basis of his the wisdom and the proper estimate which is there, he will issue a notice determining a tax liability under ASMT 13. Whether it is going to be a notice or an order, the answer is it is going to be an order, where officer will say in ASMT 13 that let's say for the month of July 2021, I was required to file the return. I did not file the return. I received a notice from the department in GSTR 3A. Still, in spite of that, I did not file the return. Now, officer has my returns of previous periods. On the basis of returns of previous period, he is making an estimation of my current periods outward supply. On the basis of it, he is saying I am required to pay this much amount of tax, and that's what he is judging, or he's doing a best judgment of it in ASMT 13. Now, 2-3 questions. Yes. Okay. Now, 2-3 questions comes up in this, which is important.
Observe.
Yeah, 2-3 question comes up in this, which is very important. First, whether officer is not going to give me any notice before determining my tax liability, and for that answer lies in section 62 itself. Section 62 says wherever any proceeding of any 62 is done, it is notwithstanding section 73 or 74. Meaning thereby, officer is not duty bound to actually issue me a show cause notice under section 73 and 74, because as per the concept of principles of natural justice, he has already given me one opportunity where he said, please file your return. Because I did not respond to the notice, or I did not respond in the manner which was expected from me, then in that case, now that opportunity which was given to me, I have not availed the benefit of it, and officer is correct at his point to determine the best judgment action in that case. What is the time limit within which he can do it? Time limit is 5 years from the due date of annual return. So let's say he wants to do a best judgment assessment for financial year 17-18. Then in that case, for financial year 17-18, the due date of final return, the annual return was 31st of January 2020. And from that 2020, he would basically have 5 years to determine that particular amount of how he's going to do my best judgment assessment. What is the option available? If let's say officer has done the best judgment assessment, what is the option available? So law says once your best judgment assessment is done, you have one more opportunity. What is one more opportunity? Moment you receive the order in ASMT 13, within the receipt of that order, within 30 days, file the return which you were duty bound to file, because of which your best judgment assessment has been done. And that return has to be a valid return. So remember friends, when I was talking about self-assessment, we talked about return, we talked about valid return. Section 62 says if somebody has a best judgment assessment order, he wants to nullify that, then within the 30 days of receipt of that order, he has to file a valid return. Valid return means filing a return and paying the tax which you are declaring in your return. Moment you file your return, your best judgment order will automatically be withdrawn. However, you may be required to pay the interest and late fees as may be the case. Now, some question which arises here, can I file my return with zero tax? The answer to that is yes, you may file your return with zero tax, where you are declaring that your self-assessment liability is zero. What is the risk in this? Risk in this is if tomorrow department says, okay, now you have self-assessed your liability, it is zero. Now we have information available that you undertook some business, and on the basis of that information, now we will issue a show cause notice to you under section 74, where you have deliberately misstated the figures in your return and you have shown the values in the return as zero, which you were not supposed to do, but because you have done, so now we will issue a notice under section 74. So the process is, you get a notice in 3A, you reply to it, file the return, matter ends. You get a notice in 3A, don't reply to it, don't file the return. You have a best judgment assessment in ASMT 13. Within 30 days of ASMT 13, file the return. Once you file the return, your ASMT 13 gets withdrawn. Once it gets withdrawn, department has power to issue a show cause notice to you under section 73 or 74 as the case may be. Remember friends, whatever we are discussing right now, the time limits for all of them is 5 years from the due date of annual return. Be it a scrutiny assessment, be it a best judgment assessment, or be it the other assessment which we are going to see. Ultimately, department has to recover the tax. For recovery of the tax, the maximum time, basically not recover, but determine the tax. For determination of the tax, the maximum time which has been given under the law is 5 years from the due date of the annual return. So that we have to take care of. Now, a very interesting question which comes in case of best judgment assessment is, and a lot of people have faced this issue. I did not file my return, my best judgment order was passed. I realized I paid the amount which was written in the best judgment order. I filed my return. The only error which I did was, I did not file the return within 30 days, but I filed the return on 32nd or 33rd day. Still, I am saying I want the benefit of withdrawing the best judgment assessment. Matter went to the Kerala High Court. Kerala High Court in case of Bridge Hygiene Services Private Limited said, nothing doing. The time limit of 30 days is written in the law. we cannot rewrite the law by giving you the benefit of filing the return after 2 days, even if you have paid the whole amount of tax within 30 days. If you don't file the return within 30 days, which is required under the provisions of non-filer of return, then in that case, we can't give you that benefit. So the only option available with the assessee in that case is to go into appeal and argue the matter and why figures in the order were incorrect. So hence, it is very important to understand and know all those people who are not filing the return. If they receive a best judgment assessment order, ensure they file the return within 30 days. Else, the figures in the best judgment order becomes final. And then, if somebody wants to contest them, the only option available is to go into appeal, where you have to pay a 10% amount before filing the appeal. And all of us know how best judgment orders are passed. They are on the basis of estimation. Once they are on the basis of estimation, it becomes very difficult that one would be able to justify why these figures are correct or incorrect. Because estimation, there is a possibility to have certain leverage that comes from the provision of the law only. Another issue which came before Kerala High Court on similar best judgment assessment was somebody who was actually issued the best judgment order on GST portal. So in the earlier case, the order was issued by hand. In this case, order was issued on the GST portal. Somebody did not see the GST portal at all. And they saw the GST portal after 30 days. The moment they realized that there was a best judgment assessment order, they immediately filed the returns and went to the Kerala High Court and they said, I was not able to see the order which was on the portal. So the order was not delivered to me within 30 days and hence give me the benefit. Please accept my return because I did not receive the order on time. Unfortunately, Kerala High Court said, once the order has been uploaded on your GST portal, it's a valid service of the order. Once it is a valid service of the order, just because you have not logged in, or even if you have logged in, but you have not seen the order, that cannot save you from the proceedings of non-withdrawing of the case, and the best judgment order becomes final in that particular manner. So hence, this Kerala High Court has said that online serving of the order is very important and one needs to be followed. Mr. MBL has asked, what is the interest rate under section 62? Answer to that, sir, is there is no interest rate under section 62. Interest rate is under section 50 only. Under section 50, the interest rate is because you have not received the notice under section 73 and 74. That is why the interest rate 18% only on the cash portion. If somebody has input tax credit available, one may take an argument by saying, to that extent, I am not liable to pay the interest, but on the cash portion, it is going to be 18% liability. However, if after the withdrawal of the best judgment assessment order, somebody has issued a notice under section 73 and 74, and still any tax liability comes up, then there is a challenge, there is a problem. They may ask for interest on the whole amount of the tax liability, which one may pay through ITC also, but still the view which comes from the law is, in that case, the interest liability might go on the 18% on the whole total amount. So till the time it is under 62 only, interest rate is going to be 18% only on the cash component. Now, coming back to this serving of order on the portal. Okay. Coming back to the serving of order on the portal, one very interesting thing which all of us should be aware of as tax professional, and I'm sure it is going to help us in future, very interesting proposition to see whether serving of orders or notices on the GST portal is a valid service. Because we see today, majority of the notices and orders, either they come on the GST portal and we get a message or an email of it that you have been served with this notice or that order. Whether it is a valid service. For that, we need to look at 3 sections and we have to understand them very, very minutely to put our point before the office. First thing is section 160. 160 says that any assessment proceeding will not be invalid just because at a later point of time you say, no, the service of notice was not proper to me. Meaning thereby, if you want to challenge the service, if you want to bring out that notice was not served properly to you or order was not served properly to you, you have to do it the moment you get it or moment you realize it. It can't be an afterthought that First, you act upon that notice, you submit the information or do a certain action, and then at a later point you say it was not served to me properly. So that's the first point to understand, that if somebody wants to challenge that, it has to be challenged instantly. One can't go to the second level and say that no, it was not served properly to me. Having said that, we come to section 169. 169 says how a service can be done. So it talks about various modes of serving notices and orders. One of the modes of service which is given in section 169 subsection 1 clause D is making it available on the common portal. So 169 subsection 1 clause D says that all these notices and orders, they need to be made available on the common portal. Now, what is common portal? So the common portal is the portal which is defined under section 2 subsection 26. Common portal means the common goods and service tax electronic portal referred to in section 146. So from section 169, we go to section 2 subsection 26. 2 subsection 26 takes us to section 146. And finally, we come to section 146, where they define what is a common portal. And this definition is very important for us, friends. Again, I will repeat. Right now, we are discussing whether servicing of notices and order on the common portal is a proper service or not. For that, now we have reached to the definition of what is common portal. Section 146 says the government may, on the recommendation of the council, notify common goods and service tax electronic portal for facilitating registration, payment of tax, furnishing of return, computation and settlement of integrated tax, electronic waybill, and for carrying out such other function and such purposes as may be prescribed. Meaning thereby that 146 says that common portal which has been defined, that is gst.gov.in, it has to be for a specific purpose which is written in section 146, or if it has to be for any other purpose which is not written in 146, then same needs to be prescribed or it has to be notified. Up till now today, we have 3 notifications where common portals have been notified. One is gst.gov.in, second is e-waybill gst.gov.in, third is e-invoicing portal. We will not go to e-waybill and e-invoicing. We know what is the purpose of these portals. The first purpose, that is gst.gov.in, we have notification number 4/17, 9/18. And you read the purpose for which they have been notified. The purpose is for facilitating registration, payment of tax, furnishing of return, and computation and settlement of IGST. Nowhere today the common portal has been notified for servicing of the notices or servicing of the orders. Meaning thereby, in today's time, we do not have a common portal notified for serving of the notices and order. And somebody who has not acted upon the notices and orders which are on the portal, one has a very good case to argue that is not being served to me properly, and hence all best judgment assessment order, all scrutiny notices, all orders against which one has to file an appeal, that time limit has not been breached at all by the taxpayer. But remember, if somebody has to argue this, somebody has to bring this, they have to bring it instantly. They can't bring this point at a later point of time. That should be the first point to bring before any officer against whom you're giving the reply. The next point, we come to assessment of unregistered person. Again, remember the chronology. We were earlier on a registered person for self-assessment. Then we come to registered person for scrutiny of return. Then we came to assessment of non-filer. Now we come to assessment of an unregistered person. That person who is a taxable person, that means who was required to take the registration but has not taken the registration, or somebody who had taken the registration but his registration has been cancelled suo motu by the officer. And we see a lot of instances today where the registration are cancelled suo motu by the officer for numerous reasons, where they say the assessee is not existent on the place of business, the assessee was involved in the business of fake invoicing, the assessee did not follow the provisions of ITC properly. For all these reasons, they cancel our registration. Now, cancelling registration is the one aspect which has happened till now. The second aspect is now section 63, which till now department has not used, but now they will start doing that. So all those places where they have suo motu cancelled the registration, now they will initiate the assessment under section 63. where section 63 says the assessment of all these unregistered persons will be done on a best judgment basis. The only difference here is before doing the best judgment assessment, they will serve a notice here. Remember, in case of non-filers, there was no serving of a notice. Only there was a notice served for non-filing of return. In case of section 63, obviously an unregistered person cannot file a return. So one opportunity is given to the person where is served a notice, where is asked, tell us why a best judgment assessment should not be done against you. If he replies, that reply is taken on record. If he doesn't reply, on the basis of information available, the officer will go ahead, put some estimates, and he will do the assessment. Now, on the practical experience which I have seen, how are these assessments done? So what do? They take GST 2A of a specific period available of that specific person in case his registration was suo motu cancelled. On that GST 2A, whatever inwards are coming, they put a specific percentage of profit, let's say 10%, 20%, 30% according to their estimation. Whatever value comes, they treat that value as a value of outward supply. And then on that, they apply 18% rate and they say this is the amount of tax which you are required to pay under the best judgment under section 63. Clearly, it's purely estimation. It does not have any basic figures which are applicable for that specific tax period, but law empowers the officer to do a best judgment assessment in this specific case. The problem in case of section 63 is that under section 62, for non-filer, if somebody would file a return within 30 days from receipt of this order, the order was withdrawn automatically. Under section 63, that provision is not there. And it has to be understood, very important, that once the order under section 63 for best judgment is passed, then the only remedy available is appeal. There the person has to go into appeal and he has to explain that why that order is incorrect. And again, for going into appeal, he has to pay 10% amount of tax. So all those cases where registration has been suo motu cancelled, generally people say, I any which way wanted to get my registration cancelled. Department has cancelled my registration. Let's not pursue that and let it remain the way it is. In all those cases, department has time limit of 5 years from the due date of annual return of that particular financial year in which that registration was cancelled, and they may do an assessment under section 63. That is why all suo motu registrations which have been cancelled, one should approach the officer, get them revoked, or maybe file an application to finally close them and put this on record. They did not conduct any business during that period. Otherwise, it may create a challenge or it may create a problem, or somebody has to actually go to the appellate authority to seek relief in this specific regard. Again, in section 63, the officer is not required to issue a show cause notice under section 73 or 74. So provision of 73, 74 are not applicable in 63. They were not applicable for 62 also. We have seen that. So 62 and 63, they have their own code in itself. They have their own procedure in itself. And they have own particular manner of dealing with the assessees in case of best judgment assessment cases. 62 is for non-filers. 63 is for unregistered person. Last in this case of assessment is the summary assessment case. It is a case where it is an exceptional situation where department is of the understanding, let's say, that they want to do an assessment of a person named as Dhadda. Department is of the understanding that if today we don't do an accelerated assessment of the assessee, that is, if we don't make an assessment of Dhadda today, tomorrow Dhadda may fly away from India, or he may become absconding, or whatever assets he have or whatever goods he have, he may sell it to somebody else. He may give his property to somebody else, and they understand that Dhadda is not going to pay tax to the government. That is the understanding which a particular proper officer has against a specific person. Now, all of us know if somebody has to make an assessment, they have to follow the specific procedure. Section 64 gives an exception where under section 64, a proper officer has to first of all go to his additional commissioner or joint commissioner, put an application against a specific person, let's say Dhadda. They have to explain that why it is important to do an assessment of Dhadda currently, right now. Otherwise, tomorrow they may not be able to recover the tax from Dhadda. If that senior officer gives the permission in writing, that additional commissioner or joint commissioner gives the permission in writing to that particular junior officer, then junior officer will go ahead and pass an assessment order without giving any notice to me. He will not give any notice. He will not issue a show cause. He will not ask me to explain my case. But on the basis of whatever information he has against me, he will pass an order against me. And what is he going to do with that order? Moment he will pass the order, he will initiate recovery proceedings against me. Let's say my goods are lying with Mr. X, and department knows Mr. X is not the owner of the goods. But department knows that goods of Dhadda are lying with Mr. X, and Dhadda was entitled to basically, Dhadda has done this to evade the payment of tax. Then Section 64 also allows the department to actually make assessment of Mr. X by deeming it to be the supplier of the goods, and by assuming that this supply has been made by Mr. X, by passing an order against Mr. X and taking possession of those goods. So Section 64, under exceptional circumstances, it can be invoked by the department, where that assessment can be done on a specific person without giving a notice, subject to that written permission has been taken from the senior. What is the way out? The way out is also there. If tomorrow additional commissioner or joint commissioner realizes that the permission which was given to the junior officer was not correct, or it was abuse of power which has been done by the junior officer, or the case of Dhadda was not like this, that he is going to run away, or Dhadda makes an application to the officer and says that he wants to get himself assessed and this order should be withdrawn, then in all 4 or 5 cases, this order passed under Section 64 can be withdrawn, and a fresh proceeding where a fresh notice can be issued to Dhadda for basically getting his assessment done can be done under Section 64. And then any tax which needs to be recovered, a show cause notice can be issued to him under Section 73 or 74. So you realize Section 64 is a very exceptional section where only exceptional power has been given to the officer, only when he has a reason to believe that if assessment is not done, tomorrow department may not be able to recover the revenue. Now, my practical experience with Section 64 has been abuse of power done by the officer, where in one of a client's case, some goods were lying at a location which was registered under GST. That person has taken one more location on rent and some goods were lying there. Now, within a period of 15 days, that person is required to get the registration updated as an additional place of business. That person did not do it. Okay. On 17th or 18th day, department team came to that new place of business, which was not part of RC. The assessee explained that it is a procedural lapse which has happened, that he has not got the goods added to his RC. He will do it right away. Departmental officer, for some reason or the other, he decided to do an assessment under Section 64 of the goods lying in that particular premises, and they made a assessment order under 64 and took away those goods and passed an order. And then later on, application was filed before the additional commissioner for withdrawing that particular assessment. So that is abuse of power. Against that, there is a safeguard under Section 64, subsection 2. But the purpose of saying this was that if tomorrow officers start understanding the provisions like this, they may start abusing this, using these provisions against the assessee, which may not be fair and justified. But this provision or Section 64 can be invoked only in exceptional circumstances. So I think with this, the provisions of assessment which are there between 59 to 64 under GST, we can summarize them, we can understand them, that starting from 59 up till 64, the gravity of assessment and the amount of estimation keeps on increasing. Where in 59, 60, 61, there is information available from the assessee side. But 62, 63, 64 are all those 3 cases where only partial information is available with the department, and department is doing assessment with an understanding that the person against whom the assessment is done is either non-compliant or does not want to comply or is fugitive in nature. Our job as a professional should be that we should know that under which section notice has been issued, because on the basis of that specific notice, it becomes quite important to understand that what action department can take and on what basis we can safeguard our particular assessee. So I think with this, I would put an end to my monologue. any question which you would have in context of this topic or related to this, we can take those questions first.
Sir, I have received. Thank you, sir. Nice deliberation. Continuous deliberation without even having a glass of water.
Right. No problem, sir. Yes, sir. Please tell me, sir.
Few questions are received from the members. I'll read
Yeah.
out so that it will be helpful for the members. See, you are told that under section 7311, penalty can be imposed at the rate of rupees 10,000 or 10% of the tax committee, whichever is higher.
Correct.
And in the clarification or circular issued, it has been given that that 7311 cannot be imposed on the delay in filing of 3B.
Correct.
And another clause also have been inserted in that general penalty provision of 125 can also be invoked if not.
Correct. Correct.
Is there any way out to come out for general penalty provision?
So good question, sir. In fact, I should have covered that. So first thing is, through a circular, they can't tell you that a general penalty shall be invoked. The point is, there is a specific penalty under 73 subsection 11. If the circular was not there, probably I would have been speaking and saying that if you don't file the return on time, they can recover this. Now it's a beneficial circular, they're bound by it. However, that beneficial circular has a condition, you pay the tax along with interest, then we would not recover it. To that extent, circular is absolutely all right. When they talk about 125, they don't have power coming from the law. 125 says that when the penalty is not leviable under any of the specific provision, then you come to 125. We have a provision under 7311. They decided not to invoke it. That does not mean it gives them power to invoke penalty under 125. So in my humble understanding, they can't go under 125.
Yes, thank you, sir. One more question. ASMT 10 told it has to be issued electronically.
ASMT 10, yes, yes.
It has to be issued electronically. And electronic portal is not notified for notices.
No, sorry. So ASMT 10, I will rectify. For them, they have said it is not electronically. But you come to the second part of the question which you're asking. Yes, sir, please ask me.
If it is issued manually, is it valid?
Yeah. So the answer to that is ASMT 10 is absolutely valid. They may issue it manually because I have written in the PPT also need not be electronically. ASMT 10 cannot be issued manually, no problem. Your question is valid in respect of a show cause notice, that is DRC 01. When you read rule 142, which is for section 73 and 74, it says DRC 01, which is a summary of a show cause notice. It has to be issued electronically. It cannot be manual. It says it has to be done electronically only. And in all those cases, all of us have a right to argue by saying that till the time you don't notify that particular common portal for serving of notice, that service is absolutely invalid.
Fine, sir. Thank you. And another thing, general penalty clause can be invoked if 9C is not filed. 9 is filed and 9C is also applicable. If non-filing of 9C can general penalty provision can be issued and order BJ can be passed if 9C is not filed.
Right. So there are two views to this. One view is that GSTR 9C cannot be filed in isolation. You have to always file it with GSTR 9. Till the time you don't file your 9, you won't be able to file your 9C. Yes. There is already a penalty for GSTR 9. So 9C becomes part and parcel of it. And once you have a late fees for 9, that is automatically applicable for GSTR 9C. I think that needs to be tested further, but it's a good sound argument to take that particular argument. The second point is it's a reconciliation statement after all, separate statement. Because it is a separate statement and it is not applicable for every SSC, hence there can be a general penalty applicable in that case. For this particular point of view, my answer would be, even if you say that there is a general penalty under 125, which may be made applicable, 125 penalty says maximum penalty of 50,000 rupees. That is 25. You can't say that it will always be this amount. It can reduce. That amount can reduce subject to you give your argument. Second, you have section 126. And 126 says that there is any penalty which is with the quantum of which is not fixed. Then in that case, if you are able to bring it on record that why you were not able to do it, officer can determine the gravity of the offense and then accordingly he can take a decision. So the first line of argument should be it is part and parcel of 9. If that argument doesn't work, take resort to 126 and your amount can get reduced.
So in continuation this, there is a notice out for saying that you have not filed the GSTR 9. So they are shared and doesn't remember the notice number, form number. They say that if you are not going to file within 30 days, 15 days, your BJ will be passed according to the information available.
Yeah.
9 is filed, 9C is pending. Can it be BJ
No.
can be passed?
No. Because it talks about that is the same section which I was referring to, section 46. It's a notice in 3A which is given, which says that you have not filed your annual return, and hence we would do your best judgment. If you don't file your 9C is a separate statement. It is not a return. If you have filed your 9, you have fully complied with that notice of 46. There is no problem in that sense.
Yeah. Final last question, sir, which I have received from the members, and this is the mail. See, notice is served on the portal, and a mail or SMS will come, and notice has been served to you. So, as we were discussing in that, if it is served on the portal, it is not valid. And that continuation SMS and mail is coming that it has been served on the portal. Is that will be a valid one? Or?
No. So for that we have MP High Court judgment of Sham Baba Edible Oils. Sham Baba Edible Oil judgment of MP High Court. It is a 2020 judgment only, where the Honorable High Court has said that if any notice which is served on the email, it is not proper and as per the provisional rule 142 read with section 169, and that service would not be proper. So the only point of department was we have given it on the registered email ID of the person. So what is the problem in that? So I think one can resort to that judgment of Sham Baba Edible Oil, where they say that at least show cause notices cannot be served on email.
Fine, thank you. Let's one of the member want to talk to.
Yeah.
Yeah, Narasimha garu maatadustharu. Mr. PL.
Yeah. Sir, I have a question.
Yes, sir.
See, we have a CGST, we have a registered with the CGST officer.
Right, sir.
But the GST officers are issuing the notices 3A or assessments 1, 2, 3. It is valid or not?
Only one question. The notice which has been issued by the SGST officer, is he an anti-evasion officer?
No. He's a jurisdiction officer.
He can't do that, sir.
He can't. And what about enforcement? Enforcement can send the notices?
Yeah. Enforcement can do that.
I'm registered with the CGST. In the CGST jurisdiction as a service provider. Can enforcement, SGST can send the notices?
Correct. So now two answers. As a practicing professional, I would say law enables them to do so. It is absolutely right. The problem or the mistake which they have done is that when they were saying that what can be done there is a slight error in the manner in which the transfer or the how enforcement can take the action. But I will tell you, in my humble understanding, central enforcement has all India jurisdiction. The only manner of serving the notice they have to correct. State enforcement, in that whole state, they have the jurisdiction. They can issue the notice to a person who might not be registered with their department, but maybe with central department, or central enforcement can issue a notice to the person who is registered with the state department. There is no problem in that.
So he can issue the notices to the directly dealer, right?
Correct.
Right. If you have not responded to enforcement, what is the complaints it's happened?
That depends. If it is a summon to which you have not replied, then CRPC provisions are there, in which again it's a penalty of 500 rupees, which is applicable according to that. Though they say that it can turn into a bailable offense and all those things, but ultimately if you read CRPC provision, it says 500 rupees maximum, which you can do, and
there is not have any jurisdiction to issue the notices.
Okay, somebody will not have a jurisdiction. You are not required to do anything at all in that case. We have a judgment from Supreme Court recently in case of Customs Canon India, and an old judgment of Syed Ali, which they said any notice which is given by an officer which is beyond jurisdiction, you need not entertain that at all, sir.
Correct.
No problem.
Correct. Fine. Thank you.
Thank you, sir. Mr. PL Narasimha has one question, I think.
Yes, sir.
Sir, am I audible?
Yes, sir.
Thank you very much for your very good lecture on this subject.
Thank you,
Really very happy, and I thank you on behalf of TTPA.
My pleasure,
Sir, here there is a small question for me. This enforcement. Okay, the state of from the state of Andhra Pradesh. So we are in Telangana, no doubt. And here the issue is there are three dealers, A, B, and C.
Okay.
So C is my client.
Okay.
He has purchased some material from B
Okay.
that has been entered by him GSTR1 and it has been reflected in 2A. I have shown it in my books of accounts. And subsequently, okay, I might have sold it to somebody. I paid it tax on that 3B by filing 3B, everything. So here the defaulter is A.
Correct.
The defaulter is A. So now they have sent someone to me to appear and pay the tax.
Correct.
Is it, how far it is correct?
It is absolutely incorrect. On the face of it, it is incorrect. On the principles of natural justice, it is incorrect. The action of the department ex facie is illegal. I would go to that extent to say this. Now, what they are basically trying to say is their cases. If first of all we understand the department side, they are saying your client C, one of the conditions which he was required to comply with is that the tax should have been paid by the supplier.
Yes.
Okay. They are saying B might have paid the tax, but B has paid the tax using the input tax credit, which comes from a person who is A who has not paid the tax.
Yes.
So ultimately, the tax paid by B has not been paid to the government. And because he might have filed the return, but he used input tax credit, which was not available to him because A was a defaulter.
Yes.
And that is why you are non-complying with 16(2)(c), right?
Yes.
The answer to that which we have to give is that as a taxpayer, you can only expect me to do what a reasonable person of a reasonable intellect can do. You can't expect me to actually do and cross-verify what is B doing in his books of accounts and from whom he is purchasing. Number one. Number two, I am only responsible for what I am procuring. If I can prove on the face of it that all four conditions of section 16 I have satisfied, I have discharged my onus. And that's what section 155 of the CGST Act also says, that somebody who is claiming the credit, he has to discharge the onus. Once you have discharged the onus, department has to come back and explain to you why your claim of input tax credit was wrong and you are responsible for it. And for that, we have a Supreme Court judgment of Arise India, where they say that somebody who is doing a business, paying tax and also paying to the vendor, you can't expect him to actually check whether the vendor is complying with the provision or not. Last, you have a Madras High Court judgment in DY Beetle in GST regime, which they say you first of all go to the supplier, ensure that you recover the tax. If you can't recover the tax from Mr. A, bring it on record. Also bring it on record that Mr. A says that Mr. C was also involved, and then you come to Mr. C and recover the tax from him. I think all of these arguments would save you, but yes, it is going to be a very long battle. So your client has to be ready for it. He has to shell out 10% at the first appeal and 20% in the second appeal, but ultimately he would get success in this case.
Okay, this is one issue. And other issue is a registered person who is bifurcated from VAT to GST. Till last year, he was paying taxes, everything, and that particular property and that business premises was sold to XYZ, wherein he got mutilated, everything, electricity, everything is converted to the other person, and that particular person, the same business is being carried out in some other premises. Okay, I don't know whether he complied the provisions of transfer, change of address, and all. We don't know. But a notice has been issued to the person who is staying in that old premises, stating that he is a defaulter and he is supposed to make the payment.
Okay. So the answer to that is we have a provision. Let me check that provision. It says transfer of property. Yeah, section 81. It says transfer of property to be void in certain cases. Only when department is able to bring out under section 81 that whatever transfer have happened to the person who is now residing in that particular premise was with an intention to actually defraud the government and not to pay the tax. Then only recovery can be made from the recipient. So if the person who is in this premise can prove that the transaction was done on arm's length and there was no connivance and he was not aware of any of the tax liability of that particular person, if he can bring that on record, then he cannot be made liable to pay tax. So you have to refer to section 81.
Okay, everything can be proved that he is not in the, he doesn't know anything about it and he was bad, and still the person is still under business with the same name, with the same registration number, but the only thing is the premises is changed. That's all.
Doesn't matter. The answer would remain same, sir. Absolutely would remain same. In fact, we have a better case to argue in this case because the premises had changed, sir.
Yeah.
Yeah. So
Okay, sir. Thank you. Thank you very much.
I have one more question. Can I ask?
Yes.
Can I ask the question?
yeah, no problem, sir.
Yeah, sir. My question is that regarding the registration. So proper officer has cancelled the registration in particular period, say December 2020, right? Then after we have given a revocation, we have replied to the officer and still he has not done. And then after he has some glitches or something, it's a technical error, then he has not revoked the registration. After 7-8 months, he has revoked the registration by recent notification. He has revoked that particular. The gap of 7-8 months, we have a huge turnover. We have paid the taxes, but coming to the late fees and interest, who has to liable to pay? There is a problem with the department, and either there is a technical problem or maybe an officer problem. But even, yes, sir, please.
Yeah, two things. Late fees, I am with you. You pay the late fees and file a refund of that late fees. At some point of time, you would be able to claim it because you would be able to prove it is not attributable to you. Okay. In fact, we have the judgment of lead plan in some Gujarat High Court, I think, which they say GST is in the trial and error phase. And because of that trial and error phase, you cannot, that assessee cannot be made the scapegoat of it, and you cannot make levy penalty on it. Interest, I have a slightly a problem with, because when you say you have paid the tax, you might have paid the tax only in cash ledger. You might not have paid the tax through DRC 03. Department would tell you if you were really interested in making the payment of tax, you could have paid it through DRC 03. Why you did not make the payment to DRC 03, and that is why they would push for payment of interest liability. I think that is going to be battle which may go the either side of it. But at least on late fees, I am with you that you would be able to claim a refund. But for that, you have to pay the late fees first of all to get your compliances regulated.
Once if issue the interest notice, if we raise the interest notice, then we can go for litigation part.
Yeah.
Yes.
Yeah, he can't directly recover from you. He will have to issue a show cause notice to you.
Thank you, sir.
And sometimes we have
Sir,
to
thank
issue
you.
the DIN number also. Yes, sir.
Thank you, sir. Thank you for the opportunity, this one, question and answer. Now it's almost 1 hour 45 minutes. You are continuously speaking. I think a break is required. Let's break for the first session and we'll join back after 10 minutes.
Yeah.
Thank you a lot, sir.
Right, sir. Thank you, sir.
Thank you, sir.
Sir, let us wait for another 2 minutes.
Sir.
Thank you for your patience, sir. You have a lot of energy.
No problem.
But be careful, sir. Don't utilize that energy in such a manner. Even now, you are looking like something around 30 years, right?
Yeah, I am 34, sir.
You're 34. You have another 30 years of life.
Right, sir.
You have to manage your ability till another 30 years, at least 30, 35 years.
Right, sir.
So we have to use it very carefully.
Absolutely, sir.
Now, here I wanted to say one thing, sir. In an appreciation to you, as my friend Siddhan Sethi said, it's not just 30 years, sir. There is nothing wrong. We can even carry on up to 80 years also. See, there is no time limit for us or a retirement age for us in profession.
Absolutely, sir.
So
I wish you all the best, sir. Thank you very much. And
Thank
we
you.
are, of course, we are continuing.
you have to use it very carefully. You will not know any impact till the age of 45, 46. Then it starts. Machine working of machine will start at that time. So you have to think that also and do it. But unfortunately, I have put you under tremendous pressure and making you to continuously speak for
No
almost
problem, sir. That's absolutely okay.
that's what, because see, I'm in 50 now. At your age, I used to work for 72 hours in office, sitting in office, continuous.
Oh, okay.
My long duration was 4 days, not 72 days, plus 72 plus another 24.
Oh,
Continuous 4 days I worked straight without a break. Just getting up fresh and having food and all, that's it. Now I'm facing getting the realization of that.
I'll take care of this advice. Thank you.
Not advice, it's just a friendly suggestion.
No, that is right, sir.
Because you will not be knowing what is the impact of the material you are taking it. It will show at later stage, which will make you non-correctable error.
Right.
Sir, you can be inspired by me. You can be inspired by me. I am 59 now, and
Okay.
within maybe 3 or 4 months, I am going to be 60.
See.
Daily I travel 80 kilometers a day,
Oh,
but still I'm energetic and dynamic.
all of
also,
you are
I can say.
energetic, sir.
So you can take my inspiration.
In fact, anybody who's speaking, he gets energy only when people are listening to him, sir. So in fact, you are more energetic than me.
Thanks a lot.
Membership dropped to 50% from 74 to 37.
But that is expected, sir. In fact, it's evening time also. I'm sure people might have to go back to their respective homes also, sir.
Their respective homes and post office obligations.
Yeah.
Because all are our frontline warriors. All the team, entire team is frontline warriors.
Okay.
In procedures, totally in procedures.
Okay.
Returns, advising clients.
Right.
Most of us are not in litigation at all. We are in frontline, totally frontline warriors.
Right.
First step of the trade and revenue.
You do all the groundwork, sir. Yeah, you do all the groundwork. If anything, if you have done a mistake,
Sir, is it comfortable, sir? Let us go for the second.
Yeah, absolutely. So we can start.
Yeah, please, sir, please.
Right. So welcome back, all of you. Now we go to the second part of the today's session, that is the recent updates under GST. We talk about the recent notifications which have been issued in pursuance to the last GST Council meeting. A lot of things have changed. This GST Council meeting has kind of taken in cognizance of various issues relating to rates. Various clarifications have been issued, though some of the clarification brings out new challenges. But at least while reading and understanding them, we kind of get an understanding that how council is thinking, and at least we can appreciate that they are proactive. One may not agree with the approach with which they might have issued this circular or the manner in which the rate changes have been done. But the good part, at least at this point, is that one would appreciate that the council is proactive and they are listening to the grievances which have been put before them. So in this background, when you come to various issues which have been addressed by the council is, I think one of the most important and challenging issues which is in front of all of us, specifically those people who are filing the returns regularly, is how to take the input tax credit for matching, whether that needs to be taken from GSTR 2A or that needs to be taken from GSTR 2B. And I think majority of us, when we look at GST portal, with which all of us interact a lot, GST portal always says that you have to take input tax credit on the basis of GSTR 2B, but not on the basis of GSTR 2A. Now, interestingly, in this regard, what has happened in this council meeting is, though there is no notification or circular in this regard, but in minutes of the meeting, what they have said is that, see, there is one section, section 16, subsection 2, clause AA, which has still not been notified. The finance bill has become Finance Act 2021, but this section has not been notified. Moment this section will get notified, that 105% benefit which we get, that is, we can take the input tax credit to the extent of 105% of the credit or eligible credit appearing in our GSTR 2A or 2B, that would go away and we have to do 100% matching in that particular regard. Okay. There they said in the council minutes that once it will come, one would have to do a matching of GSTR 2B with GSTR 3B, and only match credits would be able to take in GSTR 3B. And that is why there they clarified, or rather they said that they would clarify in the times to come, that once this 16.2 AA gets notified, Rule 36 sub-rule 4 would be amended to restrict the ITC to the extent invoices, debit note are communicated to the registered person in form GSTR 2B. And I think this is going to be the first time where in Rule 36 sub-rule 4, that is the rule today where we do the matching of GSTR 3B with 2A, 2B and all those things, we would see reference of GSTR 2B. In today's time, if somebody would look at Rule 36 sub-rule 4, you would find 36 sub-rule 4 says that you can claim input tax credit only when supplier has shown that in GSTR 1. It never refers to GSTR 2A and GSTR 2B. Only on the basis that whatever supplier does in GSTR 1 comes in GSTR 2A and 2B, we take that stand. Now, once this 2B document came up, all of us got confused. We thought we have to take credit on the basis of 2A, 2B. In fact, department goes a step ahead and says, in whichever document the credit is less, you take that credit. They don't even bother whether it has to be 2A and 2B. I think with this minutes, one can take a view today till the time section 16(2)AA does not get notified. Whatever matching we are doing, that matching should be on the basis of GSTR 2A only. And one can take a view by saying that I need not actually match it with GSTR 2B. I know what I'm speaking is an unpopular opinion. I know what I'm speaking goes against what the advisory which has been issued by the GST website, that is GST-IN. But however, as I already said, GST-IN cannot dictate the law. If law needs to be dictated, yeah. If law needs to be dictated, that needs to be dictated by the provisions of the law, but not from the GST portal. So one very important thing which comes out from this GST Council meeting, again, I'm saying it is only part of the minutes. We do not have a clarification right now, but because once it is part of the minutes, one can take a view that this is the understanding of the GST Council, and hence the matching of the credit which we do on the monthly basis should be done with GSTR 2A, but not with GSTR 2B. And obviously the consequential repercussions or benefits, whatever is available with the assessee, one would take that. Second issue is interest on ITC availed. Now, it has also been a very contentious issue. It has always been put forth by the assessee. If let's say I have taken a wrong input tax credit in my GSTR 3B, okay, and after taking that particular credit, I have not utilized that credit, am I required to pay the interest? I have agreed that the credit claimed by me is incorrect, but am I really required to pay the interest? And department always refers to provisions of 50 subsection 3 by saying 50 subsection 3 says that you're required to pay interest at the rate of 24%. And I'm sure before me, any other speaker or in your own reading, you would have come to a conclusion where you would have said, no, that 24% input tax credit or 24% interest payment is for the mismatch. And that is not for the purpose of where I have claimed a wrong input tax credit. Council has given a cognizance to this. Council have agreed that yes, there is a drafting lacuna, or drafting lacuna actually arises because the GST portal is not working in the manner in which it was earlier thought of. That is GSTR 123 system is not in place. And they have agreed that whenever there is going to be amendment in the law, there is going to be a retrospective amendment with effect from 1st July 2017, where in those cases where input tax credit has been availed and utilized, I am repeating again, input tax credit has been availed and utilized, only in those cases interest shall be required to be paid at the rate of 18%, but not 24%. Meaning thereby, as on today, whatever notices we received for wrong availment of input tax credit, to some extent, the council has agreed that there is no provision for recovery of interest. All of us should argue that. However, we should also keep that in mind that tomorrow when there is going to be a retrospective amendment, if that wrongly availed input has been utilized, I would be required to pay interest at the rate of 18%. But if I have not utilized that input tax credit, I have always maintained the balance to that extent. This retrospective amendment kind of confirms that there is no requirement for payment of interest in any manner, be it 18% or 24% on that particular interest. So this is a very welcome and a useful, I would say, part of the press release which came from the GST Council meeting. We should take a note of both of them, where the council has agreed that till the time amendment in section 16(2)AA is not made, GSTR 2B cannot be a basis for matching of ITC. Second, till the time you have not utilized the input tax credit, wrongly availed input tax credit, there cannot be any levy of interest. And if at all there has to be any interest, it is going to be 18%. And that 18% also, that will be through a retrospective amendment. That retrospective amendment would come probably next year. And you already know that whatever amendments were brought in Finance Act 2021, they have not been notified today. And we are sitting in the month of October 2021. That means whatever will come in budget 2022 may get notified maybe at the end of 2022. So this, you have to keep a note of it, so that tomorrow if you receive any notice for interest, you may use this, but it would become effective at a later point of time. Next is also an important or a useful change, that is transfer of balance of cash ledger. It is applicable for all those people who have more than one registration under GST under same PAN. So under same PAN, if I have multiple registration, maybe in the same state or in different states, now there is going to be a functionality on the GST portal where I may use the cash ledger which is there in my one GSTN for discharge of my GST liability in another GSTN. What is going to be the modus operandi of transfer, how it could be getting transferred, all of those details, all of us are waiting for. We are waiting for the amendment in the rule also, but it kind of opens up very important aspect where majority of us were always saying that once I have multiple registration in a single PAN, it is only for the government's convenience. Why a taxpayer has been put into a radar where he has input tax credit balance available in one state, he can't use in another state, or he has cash balance in one state which he cannot use in another state. Maybe for input tax credit, the battle is, it will take some time, but at least in the context of cash ledger, at least council has agreed and they've said now in the same PAN, one may transfer it. It is going to help whom? That is important to understand. So your clients who have TDS credits, who are working for government in one state and they have a TDS credit and they have a tax liability in another state or another GST and in same PAN, it is going to be useful for them. All those who are working on an e-commerce platform and they are having TCS credits, they are going to be useful. It is going to be useful for them. Or in those cases where somebody has made an excess payment of tax under a wrong GSTN, that now that tedious process of refund need not be required and they may transfer that into another GSTN for payment of tax liability. So it is going to be useful for all these people, this provision, but it is a very useful and a welcome change which is going to come in the times to come. Then we have a clarification on an intermediary. Now that is also a kind of a clarification which is useful at least for your clients who are, let's say, based out of Hyderabad or the nearby areas and who are working for MNCs or who are working for the clients which are based outside India and who are facilitating them to conduct any business in India or through them with various clients across India. Now, the peculiar feature of an intermediary service is that in case of an intermediary, when the supplier of a service is in India and the recipient of service is outside India, then generally we call it as an export of service. However, intermediary service is an exception. It is an exception because in case of intermediary services, the law says that place of provision of service or place of supply of service rather would be the place where the intermediary is located. So irrespective a MNC is located or a company is located outside India, it appoints an intermediary in India. Intermediary might receive his fees in foreign currency. Still in all those cases, it will not be an export of service, but it will be a supply of service made to a person outside India, which is chargeable to IGST. Now the question which is who is an intermediary? That has always been a point of contention, point of debate. There have been a lot of advanced rulings on this specific question, and majority of the advanced rulings have almost said that everybody is an intermediary. So somebody who is in India asking a question that I'm receiving a money from outside India, am I an intermediary? And more often than not, the advanced ruling would say that yes, you are an intermediary. Now, there is a circular which is in place. Circular tries to explain who is an intermediary with an example. These are important examples for us to understand and get a conceptual clarity. What is the scope of the meaning of the term intermediary, which is given in the IGST Act. So when you read IGST Act, it says intermediary means a broker, agent, or any other person by whatever name called, who arranges or facilitates the supply of goods or services or both, or securities between two or more persons but does not include a person who supplies such goods or services of both or securities on his own account. And when you break that, the circular says there are 3-4 things which comes out quite clearly from this definition. One is there has to be minimum 3 parties in case of an intermediary, that is a supplier, receiver, and the intermediary in between. Second, there have to be 2 supplies, supply between the main supplier and the receiver, and the ancillary supply made by the intermediary to either of the parties of his intermediary services. Third, intermediary should only act as a conduit or as a facilitator. It should not do the supply itself. It should only make the arrangements of meeting these 2 people. And third, intermediary should not work as a subcontractor, where supplier should not subcontract his work to the intermediary, and intermediary works on behalf of the supplier to the recipient. So these are 4 things which were basically explained in the circular. Now, when you circular also gives certain examples, and I think with the example we would be able to understand it quite easily. So the circular says, let's say there is a company A, which is a manufacturer and supplier of machine. They are based outside India. There is a person called C who is in India. The work of person C is to identify the customers for client for Mr. A, and let's say they identify Mr. B as a client for Mr. A. And the work of C is to only arrange the meeting and facilitating the supply between A and B. A is the seller, B is the buyer, C is only doing the work of arranging the meeting, only taking the payment on behalf of A and all those things, but C is doing nothing else, and C is charging his commission. Circular says these are services of an intermediary. C is an intermediary. If C is located in India and taking money from A outside India, this is not export of service, and C is required to pay IGST. Then comes the second example, where they say, let's say there is a company called A, which is selling the software. Along with selling the software, they have to give the customer-related customer care services also. In that case, they appoint Mr. B, where they say that to the customers of Mr. A, Mr. B should provide the customer care services. So now Mr. B, on behalf of Mr. A, provides the customer services to the clients of Mr. A. In this case, the circular says this is not an intermediary services. It is subcontracting of work done by Mr. A to Mr. B. And in this case, whatever service is given by Mr. B to Mr. A, to the clients of A. So clients of A are basically getting benefited from the service, but the payment is received from Mr. A by Mr. B. This is not an intermediary service. It is a normal export of service. And for that, Mr. B would be entitled to claim all the benefits of export of a service. I'll take you to third example just to give you the clarity of the intermediary. Why am I basically pressing upon intermediaries? You might see your clients. He might be a small individual doing the work as a commission agent, and he has some links outside the country where he is receiving some amount. So the general understanding is that all of this is export. But now with this circular, we have a clarity who is an intermediary, who is not an intermediary. So this third example is, let's say there is a company called P, which is located outside India. They are an insurance company and they have to process the insurance claims. Now for processing the insurance claim, they're looking for a person who can actually undertake this activity. They reach out to Mr. Q, who is in India, and tell Mr. Q that you find us somebody who can process the insurance claim. Mr. Q reaches out to Mr. R, and Mr. R is appointed by Mr. Phi for processing for insurance claim. Now, in this case, the circular says Mr. Q is an intermediary and Mr. R is not an intermediary. Mr. R is actually undertaking the processing of insurance claim. Hence, they are undertaking an activity which can be treated as export of service. But whatever Mr. Q is doing, that is an intermediary service, and that will not be an export of service. So 3-4 things to understand, which are very important. There has to be 3 persons: main supplier, main receiver, and intermediary. There has to be 2 supplies: main supply and supply of an intermediary. Third, intermediary should not do the activity himself. And fourth, main supply should be done by the other person. With this, we come to one more circular, which is on the subsidiary and branch office. This circular, basically, again, the problem was department was saying that if, let's say, any foreign company has another company in India, or let's say Indian company has a subsidiary company outside India, then whatever transaction of service was happening between them, law said that it will not be an export of service if both of them are branches of each other. Now the problem in department was always saying that if I am a company registered under the Companies Act in India, and there is another company which is registered outside India, because both the companies are under same management, I treat them as branches and transaction between them will not be export of service. Whereas all of them were saying that till the time we are two separate legal entities, one company incorporated outside India, one company incorporated into India, that by any stretch of imagination, one cannot say that we are branch offices of each other. Circular 161 clearly says that the understanding of all the assessees is correct. Till the time there are two separate legal persons in two separate countries, they are not branches of the same person, and hence any transaction of service taking between both of them would be a supply of service, but would not be and would be entitled for benefit of export, and one cannot say that is not going to be an export. So again, this is an important clarification. It is going to help the companies, may not help the smaller assessees, but it kind of actually explains the understanding of the department towards the various issues. Now, again, this is a procedural change, very important change. One should take a note of it. That is an e-invoicing. In respect of e-invoicing, one circular has been issued in 163. The question which was asked is, in case of e-invoicing, the e-invoice is generated online. It has a QR code. Now, once you have a QR code, is it necessary in respect of supply of goods that along with the way bill and the consignment note, the copy of e-invoice is also carried? And the answer which was given in the circular is that there is absolutely no requirement to carry the physical copy of the e-invoice till the time the supply of goods is under the cover of an e-invoice. In that cases, and that e-invoice has been issued under Rule 48 sub Rule 4. In all those cases, there is no requirement to actually physically carry the invoice. One may actually only carry the invoice in his mobile phone, or in fact may only scan the QR code and tell the invoice number, and only if the transporter is carrying the way bill number, invoice number, and the original consignment note, that transportation is going to be absolutely proper. We have already seen that we have an earlier circular. In fact, it is mentioned in Rule 138A also that physical copy of e-way bill is also not required to be carried. Now, Circular 160 says one need not carry the physical copy of e-invoice also. So, any supply covered by e-invoice, no physical copy of e-invoice, no physical e-way bill, only consignment note which should be there with the transporter along with the number of e-way bill and e-invoice. That would be sufficient compliance. No other compliance would be required. Now, this is a very, very important change. I'm sure all of us would take a note of it and we will tell our clients, and it is going to be important in times to come. So all of us know there is a section 16 subsection 4 where there is a... Yes, sir.
Sorry for the disturbance. Sorry for the disturbance in the middle, please, sir.
Yes, sir.
You are sorry because many of our friends may be missing it because it is more concerned about to everybody regarding this e-way bill. Okay,
yes.
When e-way bill is generated, okay, is the number enough to be?
Yeah, absolutely. One need not physically carry the e-way bill. E-way bill number is sufficient. And even if it is not covered by e-invoice, in that case also e-way bill number is sufficient. There is no problem in that, sir.
So can you please highlight the notification of that, please?
Yeah. I'll just tell you in a while. Just remind me after the end of it. I think it is mentioned in Rule 138.
Sure.
138.
Sorry, I have disturbed you.
No problem. Absolutely no problem. It should be mentioned in 138A. I'll just tell you after the end of the session.
Please.
Right. Okay. Now, this debit note also, this is very important. So all of us know there is no time limit to issue a debit note. Why there is no time limit? Because through a debit note, we collect additional tax from the recipient. So whenever I have paid a short tax, wherever I have shown a short taxable value, wherever my rate of tax was lesser than the actual rate of tax which I was required to charge, then I can raise a debit note. there is no time limit for it. The problem was section 16 subsection 4 on the recipient side. So if I am the supplier and you are the recipient, the problem was there is no time limit given under section 34 for me to issue a debit note. But under section 16 subsection 4, there was a time limit for you to claim the credit of that debit note. And the time limit was earlier linked with the date of invoice. So if today I want to raise a debit note in respect of any supply which I have made to you for financial year 17-18, I can do that. There is no problem. You can't claim the credit because the time limit for claiming credit of invoice of 17-18 has elapsed. Now there was an amendment made from 1st of January 2021. There was an amendment in section 16 subsection 4 already made. It was made effective from 1st January 2021. And now we have a circular. What does the circular says? Circular says is that if in case you are claiming input tax credit in respect of a debit note, and you are claiming the credit on or after 1st of January 2021, then your time limit to claim the input tax credit would be counted on the basis of the date on which the debit note was issued, but not on the basis of date on which the invoice was issued. Meaning thereby, if somebody has raised a debit note on me on 1st of February 2021, in respect of a supply which was made in 17-18, I can claim the credit of it within 6 months from end of the financial year, that is up till 30th of September 2021. Now, the question was, if somebody had raised a debit note on me prior to 1/1/2021, let's say on 1st of December 2020, okay, can I claim credit of it? Answer to that is, if I have not claimed credit of it till 1st of January 2021, I was entitled to claim credit of it till 30th of September 2021. Now, obviously, the time limit for filing the returns have passed. So this question now cannot be used as a tool of planning. But now going forward, any debit note issued by any supplier in respect of past period supplies, the time limit for taking input tax credit is now starts from the date of issuance of credit note, and it is delinked and it is not linked with the original date of invoice. Very important thing to remember, friends, is why this issue is important. So you see a lot of GST audits and GST assessments coming up. There would be a case where tomorrow department will tell one of your suppliers that that supplier has charged a wrong rate of tax from you, and department will tell him that please pay the correct rate of tax. Your customer will come back to you and tell you that I charge a wrong rate. Sorry, that supplier, not customer. That supplier will come back to you and tell you that I've charged a wrong rate of tax from you. I want to raise a debit note of, let's say, 6%. I have wrongly charged 12%. I was supposed to charge 18%. So I'm now raising a debit note of 6% on you. Now he will always tell you that there is this amendment which has come in section 16 subsection 4. Now we have a circular also. So you will not have a problem in claiming the credit. In all these cases, always recheck with that particular supplier whether that supplier has paid the tax to the government under section 74 or 73. If the supplier has paid the tax to the government, that additional tax under section 74, then you are not entitled to claim the credit on that debit note also, because it is blocked under section 17 subsection 5. Section 17 subsection 5 says you cannot claim the input tax credit if supplier has paid the tax under section 74, 129 or 130. And that is why in case of e-way bill, whatever tax we pay, in case of interception, our recipient cannot claim the credit of it, right? So similar manner, all debit notes which are going to be issued now, take an undertaking from the supplier that he has not issued the debit note in pursuance to the tax paid under section 74. If that being the case, you are entitled to take the credit. If that being not the case, you will never be entitled to take the credit till the time the tax is finally decided to be paid under section 73, but not under 74. This is an important change. This is going to change some dynamics of the trade. A lot of people now will be tempted to actually make the rate correction wherever there is a classification issue, and somebody understands that I can actually I can take that amount from the customer. He will always be tempted to issue a debit note. Now, one more clarification, though a small clarification, but I don't know if somebody was impacted by this. department was raising a very silly issue. So there is, in respect of refund of unutilized input tax credit in case of exports, somebody is making an export under LUT, you can claim a refund of ITC. Now, there under section 54, subsection 2 proviso, there is a condition. And the condition is that if the goods are subjected to an export duty, then you cannot claim refund of unutilized input tax credit. Now, in some cases, in some of the goods, the rate of tax has been notified as nil, the rate of export duty rather, on those goods. So whenever you're exporting goods out of India, customs has the power to import export duty also, to levy import duty also. In some cases, that export duty rate has been written as nil. Department unfortunately started raising the issue by saying nil is also a rate and nil rate is also leviable. So moment your goods are under the nil rate, you are not entitled to claim the refund of unutilized input tax credit under GST. Obviously, that is very silly. Nil, the intention is basically somebody who's paying an export duty on the export side, he should not claim benefit of the refund in that case. But nil, clearly that benefit is available. Circular 160 says nil or exempt. That means that they are not subjected to export duty, and refund of unutilized input tax credit should be given to the all those persons who are exporting the goods. So that's a good change. Then we have certain compliance related changes. I'm sure it will interest all of us. Three things which I have clubbed in one slide is, one is in respect of late fees. All of us knew this. All of us were waiting for it. Probably it has come late, but it has finally come. That is, now if somebody is filing late GSTR1, he would be entitled to or required to pay late fees for late filing of GSTR1, and it will be auto-populated in the subsequent GSTR3B. Now, this kind of basically becomes important because GSTR1, some of us have paid late. There has been a practice of filing it late. Now one can't afford to do that. There is going to be late fees. Plus, along with that, there is a problem. Once you file a GSTR1 late, it does not get appears in GSTR2B of the recipient. Though in the starting I said that matching should be done with GSTR2A, but all those who are comfortable with doing matching with GSTR2B, they would always prefer to do matching with GSTR2B. In that case, if somebody files a late GSTR1, the customer is not able to see the credit in GSTR2B, and that becomes a challenge for him. So now there is one more disadvantage of late filing of a GSTR2B. Okay, Mr. MBL is saying that I should refund again, repeat the refund. So what is the refund change which has happened, sir, is once you export goods out of India, there are certain goods on which export duty is leviable under customs. That is given under the Customs Tariff Act. There are very limited goods on which government basically discourages that export. And once the government discourages that export, government has basically said, if you are exporting these goods, you have to pay any duty to us. Now, when you see that tariff of export duty, you realize that there are certain goods on which there is a rate specified. For other goods, the rate is nil or exempt, or there is no rate written. So there are three things: nil, no rate, or exempted. In some states, I don't know about your state, but at least it was there in my state also. In some states, what officers are saying is somebody who is exporting goods under LUT. LUT means is not charging IGST, but it is subject to export duty under customs. So it's an export duty under customs, not IGST. If they are paying export duty of customs, there is no question of refund. That's what section 54 of the CGST says. But if I am exporting goods on which under the export tariff in customs, the rate of tax is nil, department started raising the issue by saying it is still subject to export duty because nil or exempt is also a rate. So they said it is subjected to duty and the duty is nil. Once it is subject to duty, we will not give you refund of the unutilized input tax credit. That is the refund which you claim under LUT. Now it has been clarified that nil rate or exempted rate does not matter. If it is nil or exempted, it is as good as it is not subjected to export duty, and hence refund can be claimed of unutilized input tax credit. I think it would be clear now. Okay, so coming back to compliance related changes. First, late fees, it is going to be levied now. Second, again, as I was talking in the previous session when we were talking about assessment, Now there is one more problem. If you are not filing GSTR 3B of the previous month, system will not allow you to file GSTR 1. Now this is going to dent a lot of people, specifically those people who were only filing GSTR 1, not filing GSTR 3B, because by filing GSTR 1, their customer would make the payment of the tax and the invoice to them, because it will get reflected in its GSTR 2A or 2B, whatever is the case. But they might not pay the tax to the government, and that's how government was realizing that we have to give credit to the recipient, because recipient says I can see the credit in my GSTR 2A or 2B, but the problem is the supplier is not filing GSTR 3B. So now there is a new rule 59 sub rule 6 where there is going to be a restriction where they say that once you have filed your GSTR 1 and not filed GSTR 3B, then subsequently you would not be file your GSTR 1 again till the time you file your GSTR 3B. So this is going to be quite important to understand. Next is ITC 04. We know that it's a statement which is to be filed in respect of job work transactions which have taken place. Before I go to the ITC 04 changes, one thing which I would like to appraise to the members is that ITC 04 is a very important statement and we should not avoid filing it. And I know that the form has a lot of challenges, but it is important to note that it is a statement under section 143. Okay, it's an intimation rather under section 143. If you read 143, 143 says that if you are doing job work and you're removing goods from principal to job worker, it has to be under intimation, and that intimation is ITC 04. If somebody is not giving that intimation, 143 has a provision where tomorrow department will get up and say, because you have not filed ITC 04, leave aside the late fees, leave aside all other penalties. We will treat this as a supply, and principal has supplied goods to the job worker, and we will ask the principal to pay the tax, and job worker will not get the credit. And it is going to be unnecessary complication created by the department. So it is always advisable to file ITC 04. It may be a complicated process. What government has done is they have eased out the complication by saying that you have to only take it once in a year if your client's some principal's turnover is less than 5 crore. And if your principal's turnover is more than 5 crore, then instead of doing it 4 times in a year, you do it twice in a year. That is on 6 months basis. But this is an important compliance to be done. If you are missing it just because there is no late fees on this, then the risk is not of late fees, but the risk is losing out or giving it in hands to the department to allege that whatever we have given to the job worker is a supply, and on that they might ask us to pay the tax. So that is important to understand. Next is again very important change again for all those who are into compliance, and specifically this problem arose because of when we do the compliance, we realize that these kind of mistakes do happen where we have paid the tax under the wrong head. I was supposed to pay tax CGST, SGST. I wrongly paid IGST. Now, when this question is asked to anybody, first answer would be no problem, adjust that in the subsequent return. The problem arises in all those cases where there is no possibility or enough amount is not there in the subsequent period to adjust that. And then we wonder what should we do? Should we file a refund? Should we not file a refund? Now, in this regard, there is a notification number 35 along with a circular. What it basically says is now putting an end to all the confusion. In all those cases where I was supposed to pay CGST, SGST and I paid IGST, or vice versa, that is I was supposed to pay IGST and I paid CGST, SGST, what I can do is I can pay the correct tax to the government and I can go and file a refund. The time limit to file a refund is under section 54, 2 years from the payment of tax. But now as a special provision under notification 35, the time limits at least for the period up to 23rd of September 2021. That is the date on which this notification came into existence. They said all the wrongdoings which have happened or all the wrong payments of tax which have happened, if somebody wants to make a rectification of it, then in that case, pay the correct tax and your time limit of 2 years will start from 24th of September 2021, but will not start from the date on which you made the payment of tax. So in fact, they have issued a circular along with examples, like somebody who has wrongly paid the tax on 10/5/2015. Then the answer is that in that case, he can claim the refund from 24th of September 2021, that is the date of issuance of this notification, and 2 years from that, but the date of transaction before that is going to be irrelevant. Somebody who makes a mistake subsequently, that is after 24th of September 2021, for them the normal time limit of 2 years from the date of wrong payment of tax would arise. One more important thing is, generally all of us were confused that should I wait till department tells me that it's a wrong tax which I have paid, or can I sue more to do this? The answer to that has also been given in the circular, where they say that even if sue motu you realize that you have committed a mistake and you want to rectify it, come forward, pay the correct tax, file a refund claim, and you would be entitled to the refund under this notification number 35 within the period of 2 years from the date of issue of notification, or any period subsequent after that. There would not be any challenge. So again, this is important. I'm sure all of us would have faced this problem. If you were able to adjust this amount in the previous periods by short payment of tax in other head and making extra payment of tax in other head, probably you don't need this notification and circular, but you were grappling with the issue. Now you have an answer to that through this notification and circular. With this, we come to some rate related changes. And again, these are quite interesting changes which have happened. Though I understand your client falls in this or not is going to be an important factor. But again, we can appreciate that how complicated maybe the law has been made in the zest of making it simple. So we come to the first issue, that is specified renewable energy devices and parts. I think that's one of the important things which have happened across India, specifically in case of solar energy and wind energy. Every state government has given incentive in respect of setting up of solar power plants and wind and windmills. And in respect of GST also, we see that there was a rate of 5% applicable on supply of renewable energy devices, which included solar power based devices, solar power generator, windmills, and all these things. Earlier, the rate was 5%. Now rate has been increased to 12%. To that extent, that is also okay. It's a policy decision. Government can do that. The earlier thought of 5%, now they have increased it to 12%. That's not a problem. The problem for us as a tax consultant is to understand is one thing which has changed is, you see point number C here, C on your screen, solar power generator. Now earlier the words in this was solar power generating system. Now the word has been changed to solar power generator. Whether it is going to have some impact, only time will tell. Whether generating system and generator are the two different terminologies, two different products, whether government intended to basically take out generating system and put only generator, we would look at how department takes it up. Okay. We also know that in case of solar and wind and all these things, we have this case of 70-30, where if somebody is, let's say, setting up a solar power plant, which includes services along with supply of goods also, there, interestingly, law artificially bifurcates that into 70-30 ratio, where in the entry itself is 70% will be supply of goods, assuming, and 30% will be assumed supply of services. And one need not actually dispute by saying it should be 60, 40, 100 and all those things. It itself is a complicated issue. Now, with the rate change, what has happened? Earlier, my rate was 8.9% in case of works contract. How? 5% was the earlier rate, 70% of it plus 30% was a service portion, and 18% rate, any which way applicable on services, is what it was earlier 8.9%. Now it gets changed to 13.8% because the 5% rate gets changed to 12%. Now it becomes 13.8%. Now, interestingly, when you go to the service notification, there is a works contract entry which says services supplied to government, government authority, and all those things in respect of water supply. There the rate is 12%. And we see a lot of solar work done for government in respect of water supply. Earlier, all these people were saying we are solar power based water pumping system. So we are covered under 8.9. So they wanted to take benefit of solar. Now rate has changed. And because of it, now they have become 13.8. So now they want to change their classification. They're saying, no, we don't want to go into solar rate. We want to go into water rate. Whatever work is done for government for water, that is 12%. I think that is going to be very difficult for anybody to change the classification just because he's getting an additional 1.8% benefit by changing the classification. One cannot change the classification on the basis of rate. The classification has to be on the basis of what is the work which you are doing. And that is why, in my understanding, all those who are under 8.9% have to now come to 13.8%. They can't go to 12% by saying if it is in respect of water. One more thing, if your client during the period of July 2017 till 31st of December 2018, he was working on various solar projects. It was a nightmare period for all of them people because there were a plethora of advanced rulings which said it is a works contract taxable at 18%. Only with effect from 1st January 2019, the 70-30 ratio came, which we were just discussing. Now what government has done is through a circular, what they are saying is all those people for the prior period, that is from July 17 till December 2018, in case they want to take benefit of 70-30, they can do that. Now, again, as a student of law, your question should be that where is it coming from the law? Where is it written in the law that 70-30 is possible? But just because it has come through a circular, it's a beneficial circular. If one thinks so it's a beneficial circular, they may take benefit of it. One thinks it's not a beneficial circular, they may still contest and say we are covered under 5%. Bhanuji has raised his hand. Sir, you may unmute and ask the question in case you have any.
Sir, please continue. I think. Yes.
Sir, you please continue, sir.
Okay,
We'll go for a question and answer. Prior to that only, I have just raised my hand. That's all.
Okay. So I'll finish in next 10 minutes. Okay. Next comes is minerals. Again, I'm sure your state also has this issue. So we realize that in case of minerals, there have been a lot of minerals on which rate of tax has been increased directly from 5 to 18%. And in fact, it has not been done by the government at its own wish. In fact, all these people from industry, the big players from the industry went to the government and requested that please increase our rate. So you realize that people going to the government and telling them, please increase our rate. Why did they want the increase in rate? Because if their product was under 5%, all of them have a lot of input tax credit, of which the refund was not allowed because majority of the credit related either to capital goods or for services. And we have a judgment from the Honorable Supreme Court now in case of VKC footstep, where they say in case of inverted duty, you can't have a refund of input services. Capital goods, all of us already knew one cannot claim a refund of capital goods, and the inputs portion was very minimal. So they said, okay, you can't give us the refund. Do one thing, increase our rate to 18%, because majority of whatever mining we do is actually used for the industry, which they are paying tax at the rate of 18%. So our customers will not have a problem. So to this extent, there is no problem. It's a good change which has happened. Actually, the change connected with this is something which is, I would say, is again, on the face of it properly, is absolutely incorrect, not proper. So in case of mining, all of us know that a royalty is required to be paid to the state government for the purpose of extracting that mineral. This has been an issue of litigation since a long period of time. What is the rate of GST and service tax applicable on the royalty? All of us know that matter is in the Supreme Court today, where Supreme Court has given a stay both on the service tax and recently in respect of GST, where they have said GST and service tax need not be paid on the royalty till the time we finally decide whether there is any applicability of indirect tax on this or not. For basic argument which all the petitioners are raising is that royalty in itself is a tax, it is not a service, and there cannot be a tax on tax till the time you say it is a service, and royalty is clearly not a service. Leave aside that discussion. That discussion is a separate discussion. What has happened through this circular is, one more thing which government has done is, government said now we are clarifying that rate of GST applicable on royalties 5 or is 18%. All the people of the industry said, okay, even if you want to apply, you want to levy tax on royalty, please levy tax equivalent to whatever the tax is applicable on the outward supply. In fact, there was a rate entry in the rate notification of services which says that whenever you're doing a leasing service, the rate of tax should be the rate which is applicable on the supply of those goods. I, in fact, contested the advance ruling in this case of royalty. I was able to get a successful order from the advance ruling authority way back in 2018 in case of Pioneer Partners, where the Haryana advance ruling authority said that yes, the rate of royalty applicable, rate of GST applicable in royalty is 5%. However, moment we got the order, law was amended or rate notification was amended with effect from 1st of January 2019, where that rate of rate was somehow changed to 18%, and then all against advance rulings came. Now, what has been done in the circular is they are said for period of 1st July 2017 till 31st of December 2018. During the period when rate notification did not have rate of 18% in the rate notification, circular goes and says we always intended to levy tax on royalty at the rate of 18%. Now, this is clearly something which one cannot imagine at all. The circular says, though there is no rate of 18% in the rate notification for royalty, we always intended to levy 18%, and now we are clarifying that for older period also rate is 18%. So again, it's kind of an arm twisting which has happened from the department side, where they're saying from 1st July 2017 up till today, rate of GST on royalty is 18%. You pay tax at the rate of 18% only. The problem of paying tax at the rate of 18% under RCM is it is a service, or it is treated as a service. And because royalty is one of the important cost or essential or huge cost in the whole mining, one cannot basically consume that completely. And once you cannot consume that completely, it gets accumulated, and that accumulation is as good as blocking of the funds, and one cannot claim a refund of it because Supreme Court has said the refund of input services is not allowed. So now this will completely damage the mining industry. Until unless the rate of product on the mining, all other mining products is also increased, it is going to be a huge issue, this royalty. Now the only respite is the Supreme Court, what Supreme Court says. Otherwise, government has clarified its stand that they want to tax at the rate of 18%. Carbonated beverage, I will not touch in detail. I would only say again, carbonated beverage, again, it's an arm twisting case which has happened from the government side, where till now we were on soft drink, cold drink, all of us knew it's a sin good, 28% tax, 12% cess, no problem. But there are a lot of drinks in the market which are fruit juice based drinks, which are not cold drinks, which are fruit juice based drinks. And for that, classification was under 12%. Now there is one more entry which has been added, which is that if it is a fruit juice based drink, but it is a carbonated beverage, it will still be under 40%. And again, this rate change is going to impact and hurt badly the industry, which is under the fruit juice based drink category, where they use carbon dioxide only as a preservative. There they have a problem. According to them, they're still classified under 12%. But at least as of now, government's intention is to classify it under 40%. So this is not going to impact the bigger players, because bigger players would be able to take this huge rate change. But the smaller players or the medium level players, completely they would be wiped out from the market if this rate of 40% would continue. Second last point, I'm sure all of you would have read about it, you would have laughed about it, but again, it's a very interesting issue which has been thrown by the government. There is one very big ice cream chain across India. I would not name it. They were paying tax on ice cream at the rate of 18%. And they always thought when you go and enter an ice cream parlor, a good fancy ice cream parlor, you have an AC sitting capacity and all those things, and you ask for the ice cream and it gives you ice cream in the scoop. One would always assume that it's an ice cream parlor, you're going to enjoy the ice cream, it's a service, right? However, one ice cream chain across India, they were always treating it as a supply of goods. They said, we don't cook the ice cream. The ice cream is cooked at some another entity. We only take the ice cream, though it is under our franchise only. We take the ice cream, we put that in our boxes. When customer comes, we put that in a scoop. We give them a tissue paper, we give them a spoon, and we give it to them. It's a supply of ice cream. It's a supply of goods. Metro went to the council council agreed on it, and in fact, they issued a circular where they said ice cream parlors do not involve any amount of cooking. They in fact giving the ice cream which has not been cooked by them, and that is why even if they have some element of service while they give ice cream to the customer, it's a supply of goods. And it is completely something which one would say that this is contradictory to the general understanding we have, but still they say it's a supply of goods taxable at 18%. Till now it is okay. That's a view which has been given. However, same circular, just a paragraph above that, one other question was asked: what will happen to the cloud kitchen and central kitchen? Like you order food from Zomato, Swiggy, and all these places, you realize that there are some people who only cook food. So they would cook food, they would get an order from Swiggy, Zomato, they would give it to those people, and those people would bring it to your home. These people do not have a sitting capacity. In fact, these people work from home, they only have a kitchen. Question regarding them was asked: are they supplying goods or is it a service? And in this case, the council said it's a supply of service because they're cooking the food. Interestingly, they're not serving anybody. They are in fact do not have a sitting capacity also. But in this case, council said it's a supply of service. In case of ice cream parlor, which they have a sitting capacity and all those things, they said it is a supply of goods. According to the council, the important factor is cooking. If somebody is cooking and giving, it's a service. If somebody is not cooking but buying and giving, then it is not a service. Now, one would say that these are contradictory circulars, but it is going to have a lasting impact. If your client is a bakery shop, if your client is giving cakes, your client is giving pastries, your client is giving cookies, all of them, it depends. It does not depend on how is he giving, but whether that person is cooking it or not. If that person is cooking and they have some kind of a space where people can come and enjoy, it may classify as a service. But if they're buying and giving, then all those cases, according to the circular, it is going to be goods. If it is a service, 5% tax without ITC. If it is goods, rate of tax of goods along with ITC. That is going to be the change. I think other changes in the rate, I am not going into. I would take this last thing, that is advisory on ITC. I'm sure you would have seen. Now, this is not coming from the GST Council minutes, but basically this is coming from on 17/10/2021, GSTIN issued an advisory. And they said whenever somebody is filing GSTR1 after the due date of GSTR3B, it will be reflected on GSTR2A or 2B of the recipient as ineligible ITC. And one would wonder whether that's the law. The answer to that is it is absolutely not the case. That is not the law. Again, it is an advisory coming from GSTN. GSTN is not CBIC. It is not GST Council. They do not have any locus standi to issue any advisory on law matters. They can only issue advisory in respect of how to use the portal. So one may not get influenced by this. One has to read the rule. Rule is quite clear that if credit is appearing in your GSTR2A, even if it is appearing delayed, you are entitled to take the credit subject to you have filed your returns on time. If your returns are on time, there is no problem and you can claim the credit. Last slide before I end my presentation is two judgments. I have put them in one slide, side by side, just to give you a flavor of how judiciary is working. But again, it is useful for a compliance practice. So one is your client has a lot of input credit available. He can't claim a refund because now Supreme Court in case of VKC footsteps has said refund under inverted duty structure of input services cannot be claimed. So that is one part. Your client is a trader. I'm coming to the second part. Your client is a trader. He has a lot of input tax credit and that credit is of goods only. But his output invoices and input invoices, the rate of tax is same. Your client comes to you and he says, I want to claim a refund from the department. Can I claim so? And you will tell him under which category you will claim refund. Your case is not covered by inverted duty structure. And the answer to that will be the case of your client is covered under inverted duty structure. And that's what the Guwahati High Court has said. Guwahati High Court has said that if somebody is having same rate of tax, outward and inward, but that is in respect of goods, then he can claim the refund of unutilized input tax credit. There is absolutely no problem in that. Any circular which is issued contrary to this understanding, that circular will not stand. And there is a circular number 135 which was issued. The Guwahati High Court has said that circular is improper. So I think left hand side, that is for lawyers, for argument, where lawyers would say, oh, now we have to think for some another argument. Right hand side is for the practitioners. It's a good thing. I can't claim a refund of input services, but I can claim refund of goods with same rate of tax. I can go ahead, file a refund, and can give a value addition to my client. So I think with this, I would like to put an end to my monologue again for the second part. Before we open for the question answer session, I would again like to thank the association for giving me this wonderful opportunity. I have thoroughly enjoyed speaking and interacting with all of you. It has been a long 3-hour session, but I am not tired. I hope you are not tired listening to one single voice for last 3 hours or so. Thank you again for the opportunity, sir, and I'm available for the question and answer. Thank you so much.
Thank you, sir. Thanks for your wonderful deliberation.
Thank you, sir.
I think Mr.
Excellent, sir.
Only one question, sir.
Yes, sir.
Now the question comes to square one. The globe is round. Whether to claim ITC as per 2A, 2B, or matching is required or not required.
So yeah, I will answer it in this way. As a practitioner, I will say yes, matching is required. I would not give a lawyer's view, but yes, I will say matching should be done as per GST or 2A. That is the correct understanding of the law. This 2B matching comes from GST-IN, and again, GST-IN is not. It is no such law, sir. So I would say matching should be done as per GST or 2A.
Yes, sir. One question, one more, sir. Extension of the question. Now, from the frontline warriors, we are getting into a litigation module.
Correct.
Because the people are raising so many notices.
Right.
Yesterday, I myself has attended one, given the information for the auditor.
Right.
So for initially they asked sample invoices. Now they want full set of invoices along with the monthly claim of ITC in 3B and along with the list of invoices claimed in that, and they want 2A.
Correct.
So we are going to give a question that why mismatch, why it is not claimed excess. You have claimed excess in this month, you have claimed shortfall in this month, you have lost with the shortfall, and you have whatever you have claimed excess, you have to pay back. So now we are in a troubling phase. Means the client is going to be in a trouble phase. Once the client is in trouble, profession is under trouble.
Yeah.
You have to safeguard the client.
Correct.
So question is how to handle those circumstances if it is not appearing in 2A and appearing in 2B, maybe not related to the directly not related to the input tax credit session, but
so I'll answer it. So I'll answer it in this manner. First of all, decide the quantum and ask the client how much risk appetite he has. In case he says, I am ready to pay this much amount of tax, I would always suggest do not litigate the matter, pay the tax along with interest. You would get yourself free from the penalty. Matter ends there. That's a valuation to the client. If the amount is so much that client says, I cannot pay this, then we have a lot of legal defense. That is, from 1st of July 2017 till 7th of October 2019, there was no concept of matching. Second, after that, when the concept of matching came, that is when Rule 36 sub Rule 4 came from 7th of October 2019. Even after that, the rule matching says that even if the credit is appearing, even after the due date of filing of return for the next year, I am allowed to do so. There is no restriction in 36 sub Rule 4. Third, 36 sub Rule 4 does not talks about appearing of credit in 2A and 2B. That is what we understand. Rule says supplier should file in GSTR1. Take a declaration from the supplier that he filed in GSTR1, maybe in B2C or in some another column. Then I am free. That is between the supplier and department to see whether he has filed a correct return or a wrong return. Last, take a declaration from the supplier that he has filed, he has paid the tax to the government. He might not have shown in GSTR1. There are a lot of people who are, for catching the fame, are actually in Supreme Court or High Court challenging 36(4). Somebody would give you a favorable order that 36(4) as a rule is invalid, and you would be able to by that time succeed in that matter. The point is you have to keep the matter alive. You have a lot of reasons to keep the matter alive if client is not in a state to pay the amount.
One more, sir. If the supplier has not at all filed any return, but we have paid to the supplier, we have the valid invoice, We have paid within 180 days. We have received the goods of the services.
Correct.
But supplier is not traceable and not filed the returns.
In that case, you have a judgment from Supreme Court of Arise India. Take benefit of that judgment. That judgment clearly says a recipient, he cannot, if he has done everything which is possible within his scope, then you cannot recover the tax from him, recover the tax from the supplier.
Thank you, sir.
Welcome, sir.
I think Mr. MBL want to have a question.
No, sir, I don't have.
అన్నా సిద్ధమన్నా ఒక క్వశ్చन అన్నా
Please, Mr. CV Subramaniam.
हाँ सब आप हिंदी में बात कर सकते हैं ना, कंफर्ट है ना?
हाँ बिल्कुल है सर.
अच्छा, अभी लास्ट में गुजरात हाई कोर्ट का जजमेंट बोले ना लास्ट में,
हाँ
अपने को ट्रेडिंग ऑफ सीमेंट है उसमें.
हाँ सर.
उसमें एक्चुअली बिलिंग का है 400 रुपए में बिलिंग होता उसमें.
ठीक है.
उसमें अपने बेचने का 300 में बेचता हूँ.
ठीक है.
उसमें क्रेडिट नोट जो भी कैश डिस्काउंट लाइक क्रेडिट नोट जो भी है क्रेडिट नोट देते पूरा कंपनी वाला.
करेक्ट करेक्ट.
उसमें क्या है, विथ एग्रीमेंट एंड विदाउट एग्रीमेंट का दो चीज है उसमें डिस्काउंट्स में.
करेक्ट.
कंपनी वाला क्या कर रहे थे, विथ एग्रीमेंट का जो कैश डिस्काउंट क्वांटिटी डिस्काउंट जो दे रहा था वो विथ एग्रीमेंट का दे रही.
ठीक है.
वो अपन जो पोर्टल में 2A में आया था वो रिवर्स कर दे रहे साथ साथ.
करेक्ट.
जो विदाउट एग्रीमेंट का एनुअल डिस्काउंट फॉरेन टूर एक्सपेंसेस जो भी है वो विदाउट एग्रीमेंट का.
ओके.
थोड़ा डिपार्टमेंट वाला क्या बोल रहे थे, वो भी आपका उसमें भी टैक्स ऑफ पेमेंट करना बोल के बोल रहे. अपन बोल रहे थे जो कंपनी जो दिया था उसमें तो रिवर्स करे था, बाकी था तो विदाउट एग्रीमेंट. दैट इज नॉट, वो तो कितना आता अपने को मालूम ही नहीं.
करेक्ट.
बोल के ऐसा कर रहे थे. और एक है इसमें से लिंक है, अब वो अभी 28% का टैक्स पोर्शन ट्रेडिंग में अपन परचेस कर रहे थे, अपन सेल कर रहे.
करेक्ट.
मगर एलिजिबल आईटीसी में क्रेडिट लेजर में आईजीएसटी एचजीएसटी सीजीएसटी खड़ा हुआ बैलेंस.
ठीक है.
वो अपन रिफंड ले सकते क्या?
ठीक है, तो पहला तो सेकंड क्वेश्चन का आंसर देता हूँ. आप रिफंड ले सकते हैं. वो गुवाहाटी हाई कोर्ट का जजमेंट है बीएमजी इंफॉर्मेटिक्स प्राइवेट लिमिटेड का, जो भी मैं दिखाया वो क्लियरली यही चीज को बोलता है कि अगर आपका रेट ऑफ टैक्स सिमिलर भी है तो भी आप इन्वर्टेड ड्यूटी में आते हैं. एक्चुअली 125 नंबर का सर्कुलर है जो ये बोलता था ट्रेडिंग जो लोग करते हैं वो इन्वर्टेड ड्यूटी में रिफंड नहीं ले सकते. तो हाईकोर्ट ने बोला ऐसा कानून में नहीं लिखा है, आप सर्कुलर में नहीं लिख सकते हो. तो अगर कानून में ऐसा कोई रिस्ट्रिक्शन नहीं है तो रिफंड बकायदा ले सकते हैं. तो पहला चीज आप रिफंड ले पाएंगे. बस ये है आपको लड़ना पड़ेगा क्योंकि नीचे वाले अफसर को ये चीज डाइजेस्ट होने में थोड़ा समय लगेगा सर. बट इट्स अ गुड वैल्यू एडिशन टू द क्लाइंट. नंबर 1 सर. नंबर 2, आपका जो पहला वाला क्वेश्चन है जो विदाउट अग्रीमेंट आप बात कर रहे हैं, उसमें एक चीज का क्लैरिटी चाहिए. वो विदाउट अग्रीमेंट तो होगा पर एक सर्कुलर के अगेंस्ट में होगा जो सीमेंट कंपनी टाइम टू टाइम सर्कुलर निकालती है. वो बोलती होगी ये फेस्टिवल में इतना खरीदो तो ये मिलेगा, ये डिस्काउंट, ये एडिशनल फेस्टिवल बोनस मिलेगा या ये ऐसा होगा. तो वो अग्रीमेंट में नहीं लिखा होगा पर वो सर्कुलर होंगे उसके अगेंस्ट में होगा. अगर आप अग्रीमेंट को ध्यान से देखेंगे तो उसमें लिखा होगा कि ये जो अग्रीमेंट है इट इज बाउंड बाय वेरियस सर्कुलर्स एंड स्कीम्स इशूड बाय द सीमेंट कंपनी फ्रॉम टाइम टू टाइम एंड एज अ डीलर यू आर ड्यूटी बाउंड टू अडेयर टू इट. ओके. So basically ये जितना भी पैसा आता है सारा it is still covered by the agreement. It is just that in the agreement they say we would issue circular from time to time and you would follow. So the answer to that would be हम तो माल खरीदते हैं, उसका हमारा अग्रीमेंट है और उसके अगेंस्ट में हमें डिस्काउंट मिला है and hence that is why ये हमारी कोई आउटवर्ड सप्लाई नहीं है और इसके अगेंस्ट में हमें कुछ पे करने का जरूरत नहीं है टैक्स. इसके अंदर एक जजमेंट है, I'm skipping the name, कोई तो एक ऑटो हाँ साई सर्विस स्टेशन करके सी स्टार ट्राइब्यूनल का जजमेंट है. वो एग्जैक्ट सिमिलर इशू है ऑटो कंपनीज के. ऑटो कंपनी मतलब जो गाड़ी बेचने खरीदने वाले लोग थे उनको डीलर डिस्काउंट मिलता था, उसके लिए आप उसको यूज कर सकते हैं.
अच्छी बात. ओके सर, थैंक यू वेरी मच.
थैंक यू सर.
Sir, I have one question.
Yes sir.
See, now doing its audits continuously, but still they are giving the 2A and 3B difference. 2B, why they are giving? They know that it is not applied for it's a companies. They are not applied for 2B and this one. Why are they are giving it a audit points 2B and 3A? 3B and 2A का difference इतना this much of amount of coming बोल के.
कौन से पीरियड का?
Yes, they are raised the question and audit points mein aa rahe.
Which period? Which period?
17, 18, 18,
Yeah,
19.
yeah. So they are raising it not on the basis of 2A. What you will read the audit para closely, you will see they are saying it's a mismatch and it's a non-compliance of section 16(2)(c). They are not referring to 36(4). They are very smart.
No, sir. Not 16(2)(c. Not 16(2)(c. They are mismatching of these 3B and 2B.
So again, I am saying for the period up till 7th of October 2019, they are saying there is a mismatch of GSTR 2A and 3B, and that mismatch means your supplier has not paid the tax to the government, and it's a non-compliance of 16(2)(c). That's what they are writing in their notices. They can't raise notice for 36(4). So they are using 2A through the 3B mismatch, but they're referring to section 16(2)(c). I think our only answer will be that this mismatch thing will be taken care of through the amendment which have come in Finance Act 2021 by insertion of clause 16(2)(a). Till that time, there was no provision in the law. So till the time 16(2)(a) does not come into picture, you cannot tell me that there is a non-compliance of 16(2)(c). Very simple answer. You take this matter on this issue only further, you would be able to sustain.
Thank you.
Any further questions?
I think Mr. Bhanu has a question.
He is not Mr. Bhanu, he is Mr. PL Narasimha. Bhanu is his.
I am sorry, sir.
One more question,
It's
sir.
okay. It's okay. It's a
You are
joint
not
account,
aware,
huh?
sir. We are aware. He is
It's
Mr.
okay. It's a
Bhanu
joint
Narasimha.
account.
Narasimha, PL Narasimha. He is our ex-president.
No, the question what I was supposed to raise is already answered by you for the question raised by our Sitam Jati and MBL also.
Okay.
Thanks a lot.
Thank you, sir.
So,
Sir,
yes, sir.
one
Yeah,
more question.
please.
Directors, suppose if a loan amount, director has given some security to the banker, is their own individual property. If there is any RCM is applied.
Personal guarantee, you are saying personal guarantee?
Correct.
So I would just suggest one small thing. Your director should be employee of the company, right?
Yes, it's almost, it is the employee of the company.
Just draft an appointment letter of that director and put a line in that appointment letter that you have to also give the personal guarantee. It will become part of employer-employee relationship, no tax.
And one more thing, it's in ROC there is a director, is the permanent director. But we can't say that it's an employee.
Why?
He's the director of that company. So we cannot treat it as an employee. But he has drawing the salary from under section 194A.
No, yeah, salary under 192.
192.
So there is a circular now in GST came into it said if you're paying salary under 192, it is an employee. They only understand this. So I think this will serve your purpose.
Right, sir. Thank you.
Yeah. Further, any questions, please?
So while we are doing the practically, we have in mind in more questions. But we are not getting any. Yeah.
Sir. Yes, sir. Thanks a lot for your patience, knowledge, sir. And very excellent deliberation. I got feedback from my members when session was going on itself. Got very, very excellent feedback. Sir's deliberation is very nice and excellent. Even though the members dropped from 74 to 30, there are so many other reasons for which the members left the sessions.
Yeah.
Not because of that, not deliberation is not good. Maybe the personal reasons that made them to leave the session.
Right, sir.
Yeah. Thanks a lot for
my pleasure.
Thanks a lot for enlightening us in the assessment proceedings, how the things has to be handled and all. And also the amendments which has been made that kitchen is on when it is prepared, it is service. If it is purchased and sold, it is not service. The bakery fellow will be under very tremendous.
Yeah, absolutely.
Because he'll sell confectionery, he'll not prepare it.
Correct.
He'll bake cakes and sell it.
Correct.
He's under
Absolutely, man.
तवा से निकल के चूल्हे में गिर गया हो.
Correct,
And
sir.
even that royalty also, people thought something will come out and it has come out in a different way.
Anyway.
And that carbonated water is also going to make us bubbles will come out from
Yeah.
small traders, small units, which those who are there. But our Prime Minister's intention is make Swachh Bharat self-earning persons. But
Correct.
how far it is going to support us, we don't know. It's
Agreed.
only supporting huge business houses, but not small persons. Some small traders, SMEs are in a very big trouble.
Yeah.
By all means, they are in trouble. Thanks a lot, sir. Thanks for your nice.
My pleasure, sir. Thank you so much.
Finally, I would like to say thank you very much for your excellent speech and all. Whatever we could learn something, we could hear something which is new. Everything is fine. And if you can kindly give us the notification number for this e-way bill, if the number is inserted in the, in fact, the physical copy is not required, but the number, if it is there, if you can give that notification, I think it will be more useful to all our friends, professional friends, because it's generally regular.
So yeah, I'll tell you, Rule 138 1B. You can refer to this Rule 38 1B. It clearly says a copy of e-way bill in physical form or the e-way bill number in electronic form or mapped to a radio frequency identification device. All three are possible. 138.
So you mean to say you mean to say that way bill generated, that number can be given in WhatsApp or whatever it is?
Yeah. If it is in WhatsApp or in email, it is more than sufficient. No requirements.
Okay, thank you very much. I wish you all the best.
Thank you so much, sir.
Yes, Dhadda sir. Thanks a lot.
Thank you, sir. Thank you.
Thank you.
Good night, all of you.
Yeah, we'll conclude the session now. Thank you.
Lot of thanks. Thank you.